has been shaken so much. These tensions between Beijing and Washington, commentary out of Beijing, concerns from U.S. businesses that maybe they don't have a safe way of doing business there. Do any of these measures make you feel like, okay, this is a safer place for either American investors or American businesses these days?
No, not at all. I mean, they don't have anything to do with rule of law or whether China's going to crack down on certain companies, Western or domestic. What this is an opportunistic play in the stock market. The government said it's going to backstop you, so you jump in and you ride as long as you can. But if you're in China and you're trying to actually determine whether your future looks better now than it did, say, a month ago, and you're a household, you're trying to figure out, how does this advantage me in the long term? Is this going to be a one-off handout, or is this going to be something that restructures the economy in a way that's beneficial to me? If you're a corporate, we've seen bottom barrel borrowing for 3 or 4 years now. Is this going to spur borrowing beyond a month or two, or even that, or is it going to simply are firms going to look at lower rates and say no, thank you, the way they've done it for the last 4 years? So the question is this a structural pivot in the minds of people in China so that they'll change their behavior going forward? And I think we haven't seen enough from the stimulus package to convince us that that's going to happen.
What would change your mind on that front? What would make you think this is more long-lasting on the ground there?
Well, I think it would have to be a lot more demand-side stimulus, but not one-offs. It has to be more about restructuring economy so it's no longer disincentivizing savers and households and private firms in order to advantage, state firms. You don't want to reduce the savings rate so that you could take that credit and plow it into manufacturers, for instance. So what you want to see is an economy that looks like it works for you if you're a Chinese family. And what's happening, and has always happened as part of the financial system, is suppression of households in order to boost the state. And I think they need to reverse that in order to see a sentiment shift.
What's your expectation for growth there for the rest of this year and for next year?
Well, look, they've done enough so that they're going to claim to at least be near the 5% GDP growth target. A lot of what's happening right now, as it's been suggested on the consumption side, will be pulling forward growth. If you're trading in goods now, you're not going to need them in the medium term, so that's medium term negative. But it's enough to pull forward growth in the coming months. Retail sales should improve, property should stabilize. So it will be a boost in the short term to growth. The question is, creating all these saying they're going to create all these swap facilities for stocks, and they're going to be plowing all this money into things that they don't really care about, like asset markets. How long will this last? How much will the boost be? And once you get to that, point in the stock market, so you get to, a certain number, what happens then? Does everyone sell into this? That's what's happened every other stock market rally in the last 15 years. So it's a real big question beyond the next several months. What's going to happen? The growth will go up a little bit, but again, we may be back to the drawing board if they don't do a lot more.
Leland, do you ever go to China, or is this based on things that you're reading? Just what sources are you looking at?
Well, I mean, we have an active survey that tracks China for thousands of firms every single month. So it's firms on the ground reporting their conditions. I do go to China. It's a different environment there now than it was 5-10 years ago. But I think that the core here is that we're trying to get responses from around the country. The problem for people jumping into China is they go to Beijing, they go to Shanghai, they go to one other choice city, and they bring back their impressions. And what China Beige Book is trying to do is do away with that, to survey the entire economy, the entire country, all the major sectors, all the major regions, and see what the many China stories are telling us, rather than just impressions of a trip or 2 or 3.
What is different now versus 5 or 10 years ago? Because I haven't been there in a while myself.
Well, the biggest thing is about sentiment, and I think that's why they did this package right now. The idea for a while was that China was changing and China was growing, but that there was still opportunity. And I think what happened over the last 4 or 5 years is that there's a belief that the government is cracking down, that it's not focused on supporting growth, it's not supporting households and consumers, and so you look at borrowing, you look at investing, you look at hiring, and all those metrics underneath the hood are looking really bad and have looked really bad, particularly borrowing, for years and years now. So the idea is, how can you kick China sentiment back up a couple notches and make sure that this doom confidence loop doesn't hit? People have been depressed about consumption, depressed about property. How do you make sure that these things don't feed off each other to create some sort of broader contagion?
Leland, thanks a lot.
Thanks, Becky.
All right, coming up, social media crackdown. The state of Texas is suing TikTok. Details are next. And in the next hour, Bank of America's Savita Subramanian is going to join us with her read on the market ahead of today's jobs report. Squawk Box will be right back. Texas Attorney General Ken Paxton sued TikTok yesterday, accusing the company of sharing and selling minors' personal information. Not people in mines, but young people. That's in violation of a new state law that seeks to protect children who are active on social media. Now, TikTok denied the accusations. A spokesperson said that the company offers robust safeguards for teens and parents.
The Biden administration's sweeping student loan forgiveness plan was temporarily blocked again just one day after a federal judge in Georgia said that he would allow the restraining order against that plan to expire. A St. Louis-based U.S. district judge issued a preliminary injunction against the plan that bars the Department of Education from forgiving people's student loans until the judge has a chance to rule on the case. The case was effectively transferred from Georgia to Missouri because the Georgia judge said the plan would most harm student loan servicer Mohila, which is based in Missouri.
Meantime, when we come back on this Jobs Friday, we're going to talk about the push to return workers to the office. Amazon's recent 5-day mandate reportedly sparking backlash among employees. We're going to dig into that story next.
BC.
Welcome back to Squawk Box. Amazon CEO Andy Jassy recently telling employees that they would have to return to the office 5 days a week. Some current and former Amazon employees blasting the plan as a way to reduce headcount without announcing layoffs. Joining us right now is Joanne Littman, Yale University lecturer and author of That's What She Said, What Men and Women Need to Know About Working Together. We're also joined by Brian Elliott, Work Forward CEO. Good morning to both of you. I'm actually surprised not by the pushback. I'm surprised by this explanation that somehow folks feel that this is a way to fire more people. It may very well be, but the memo, as far as I understand, was super explicit about the idea that they were planning to take out middle management. So the whole goal, whether you think this is related or not, is take out middle management. We think we have too much middle management, and get everybody back 5 days a week. I don't know if, and maybe those things are interconnected or not, but it almost doesn't matter. What do you say?
I agree, it almost doesn't matter. And the reason it doesn't is because what Amazon is doing is now being absolutely looked at by every other company to say, can we do this too? Can we bring back people 5 days a week? And a lot of executives want to do that. The problem is, Andrew, we have heard this every single fall. I've been here every single fall since 2020 with executives saying, now it's time. Now
it feels a
everybody's
lot
gonna
more
come
so.
back.
I mean, a lot of people are back genuinely now 3-4 days a week. So adding a fourth or fifth day doesn't seem totally.
They're back on a hybrid basis. I think hybrid is very, very different than 5 days a week. I really don't think that we're going to go back to that 5 day a week standard. I think that is wishful thinking.
And do you think it's a bad idea? Meaning Adam Grant is out there quite publicly saying that when it comes to what he calls deep work might be an engineer who's coding by themselves. There's periods of time where you actually have to do the work, right? I'm a writer. You have to do the work. That there are certain instances where not being in an office is actually better to actually be more efficient. But when it comes to meetings and all of the interaction kind of stuff, that clearly being in one place together is better.
100%, and that's why I believe that this hybrid situation is where we're going to end up. The hybrid, 3 days a week, maybe 4 days a week, but you want your that deep work.
Right.
You can do that at home.
Brian, what do you think about this?
There's lots of ways where you can make flexibility like that work in a lot of different ways. You look at companies like American Express, Atlassian, Airbnb, NVIDIA, that have all taken a much more flexible approach. And then what they do is instead of saying, hey, here's a top-down command that says, I know the right answer as the CEO for everybody in the company, for every business unit, for every function, they actually ask leaders to figure it out. What's right for your team? And the magic of that is if your team is actually talking this through and figuring out what's the right pattern for us, you get a lot better results. You get better engagement, you get better productivity, you get better satisfaction of your employees. We all kind of get it, right? Like if you have a regional sales team, asking them to be together 3 days a week to learn from each other, to model off of each other, to do the pipeline review, to do some training, can really pay off. If you've got an engineering team that's distributed across 5 states, asking them to come into different offices 3, 4, or 5 days a week is going to strike them as being like, what are you talking about, boss?
It
So
does,
I think Amazon's moved from that sort of team-oriented way of working to I'm the boss, I know what's right, and from 3 to 5 is going to cause
Can
them
I just ask a
loss
question?
of
It
talent.
sounds to me, if you talk to people in and around Amazon, that even though people put down a 5 day a week plan, that there is, I don't want to say there's no expectation that you're going to be there 5 days a week, but the truth of the matter is, for senior people, they're going to travel because they have to work. You talked about salespeople, they're going to travel. This whole idea of even people who are working 3 days a week, oftentimes, and one of the great conundrums that I think a lot of firms have found, is that people never worked 5 days a week to begin with. It wasn't that they didn't work 5 days a week, but they were moving around. Maybe they had to go to meetings, so they weren't in the physical office, even if they were in the same city. Sometimes they're traveling to other places. Sometimes they're bringing their child to the doctor, and so they're missing the morning. And so the whole idea that everybody needs to be in one place is not. It's not that they don't. It's just that if you lop off Monday and you lop off Friday, and then you say to yourself, one or two of those other days is getting missed anyway because people are actually working but in another place. How do you set up a construct where people can actually get together in any efficient way?
That's why 5 days a week, those demands currently are not working. I've spoken to people within companies that are required to be there 5 days a week who say, it makes no sense. I talked to a manager at one of these large organizations who said, look, I'm in one office. The people who report to me are elsewhere. I don't care, and it is a waste of my time to tell them they have to be in 5 days a week because I don't care where they are. I just want them to perform.
And by the way, sometimes the managers aren't there 5 days.
And the managers don't want to
That's
be
right.
there either. But the research shows, and this is why I really think we will not go back to this 5-day standard. I just think it's so outdated. And the major reason is that it is working. The hybrid situation is working. We're now at a point 4 years in where there's actual research coming out about this. Nicholas Bloom at Stanford, you guys know him well. He has a paper that came out just in June where they looked at a hybrid, I believe it was 3 days a week. They found performance did not suffer, but what did happen is employees were happier and retention improved. And then there was another study, very recent, that came from the University of Pittsburgh that found that when companies do demand people come back and be on the premises, it actually does not affect financial performance. It doesn't improve the stock price or your quarterly earnings. And so, we're seeing that it works.
Brian?
There's also
Yeah,
a
go
couple
ahead.
of things we've seen even in the past few days. Nick Bloom and Adam Grant both shared out a study yesterday that showed that if you give people the ability to work where they're most effective, to work from home or work from the office, when they're doing their individual work, you get a 12% boost in productivity. So kind of hard to ignore that one. On top of that, Joanne was talking about the mandates, like pushing people back even further. Besides the fact that it doesn't boost financial performance, it actually degrades employee engagement. And there's mounting evidence now that it does actually cause people to leave. And the people that are most likely to leave are people who've been there the longest, that have tenure, people who have been recently promoted because they have marketable skills, right? They're the ones that can find a job even
You know
in a
what?
tougher economy.
If it's
And the third one
tenure-
is women. There was a study that came out that,
Yeah.
sorry.
I'm sorry, go ahead.
There's a study that came out from Upwork just in July where they polled about 1,000 different C-level executives that had done mandates. 2/3 of them said that it disproportionately caused women to quit over men, and that they couldn't replace those people fast enough, and there was a knock-on effect on their productivity.
That makes sense, Joanne.
Yeah, we've talked a lot about this, about the women factor, where women lost their jobs at the beginning of COVID. We had the she-session, and we thought it would be permanent, and this is a terrible thing. But because of hybrid work, we now have a record percentage of women in the workplace, led by women of young children.
The only thing I'll say to your first point, Brian, or your second point, the issue on tenure, whatever point it was, maybe in some cases management wants them to leave. You can't get rid of tenured people unless you make them really uncomfortable.
Yeah, if you look at the data, there's a firm out there called Flex Index that actually tracks what the policy is for flexibility, whether you're fully in the office, hybrid, remote, for about 13,000 firms around the globe. They put out their Q3 report, and what it showed is that the firms that are most likely to be pushing people back in more are actually the ones that want to shed talent, because you can correlate who's done a layoff in which industries.
Right.
So it's
So you think this
big
is just
tech,
a shed?
financial
This is a
services.
temporary shed talent moment for Amazon, and maybe other companies will look at this and say it's a shed talent moment. There are these large businesses like an Amazon that have a massive bureaucracy. One of the things they're trying to do is undo some of that bureaucracy, who unfortunately have potentially even overhired, you could argue, in certain cases. And what do you do about it's not just one or two employees. You go online and I've experienced in my own life, there are employees who are not paying attention. They're on the Zoom, but they're not on the Zoom. They're doing 100 other things. It's a whole different system. And I don't think that's just 10% of the employees there are people, maybe even more than 10%, who are taking advantage of the system. And I think one of the things that some of these companies are seeing and getting frustrated with is by these people who are taking advantage of the system. Sometimes very tenured people who are taking advantage of the system, sometimes very young people who are taking advantage of the system.
So the
But
trick.
it's a lot easier to take advantage of the system remotely.
So, but the trick here is if you require people to come back, are those the people that should leave? Are they the people who are gonna leave? There is some evidence to suggest that the people who are going to leave are
Right.
your high performers because they
Right.
are marketable. They're the
But
people.
that's why they always say,
who have other
for most
opportunities.
people, you have to come back
Right.
unless you have an agreement with your manager, and then they cut deals for the people they actually want to.
That's what I'm saying. The rainmakers
Let's also-
are always, everyone's letting the rainmaker do whatever they want.
But
Yeah,
that, and that will
let's also
continue to
assume that
be
you've
true.
got 10% who are sort of cheating the system. What's that say to the other 90%? What's that say to the 20% that are your highest performers that are saying, look, I don't trust 10% of you. So for those of you that are high performers as well, 3 days a week in isn't enough. I need you back 5. It's just a very negative signal to trust. And trust is actually what causes people to quit their jobs and to leave
And
their
on the
businesses.
premises, you have 10% of people who aren't performing either, right? So those are the people
Yeah.
who you need to deal with, as opposed to, imposing this on 100% of your
Okay,
employees.
real quick, because we got to go. If you're betting, just yes or no, 12 months from now, Amazon will have a 5-day-week policy, and other big businesses will have a 5-day-week policy or not?
No.
No. Brian,
No.
Joanna and Brian, thank
Nope.
you. We'll have you
Thank
back
you.
before a year from now, but we'll see.
We'll see.
It is now just past 7 o'clock on the East Coast, about 7:03 right now. You are watching Squawk Box right here on CNBC. I'm Andrew Sorkin, along with Gil Kernan and Becky Quick. A lot of big stories to tell you about this morning. Ports from Maine to Texas, they are reopening. This is good news after dock workers and the port operators reaching a deal on wages. We're going to have a live report from the docks of New Jersey in just a moment. And it is Jobs Friday. Poll forecasters expecting an increase of 150,000 non-farm jobs in September. That's the number to beat. The employment rate expected to hold steady at 4.2%. We'll have those numbers at 8:30 a.m. Eastern Time. We'll bring them to you live and, of course, have some instant analysis. And then, of course, we're watching crude, the price of crude, up 10% this week alone. Escalating violence in the Middle East and fears of a potential Israeli strike on Iran's oil production, keeping the markets now on edge.
U.S. port workers are returning to their jobs today after reaching a temporary labor deal to end that strike. Frank Holland joins us right now from Bayonne, New Jersey. And Frank, what's it look like there today?
Hey, good morning to you, Becky. Well, yeah, the sun's just coming up. You can see behind me, the cranes aren't moving, but they are expected to get moving later on today. Things are expected to get back to normal. So from now until January 15th, ports from Maine to Texas, including the port of New York and New Jersey that's right here behind me, are going to be back up and running as the first East and Gulf Coast port strike in just about 50 years. That's come to the end on a tentative agreement, again, until January the 15th. The ILA Union and Port Operators, USMX, they've agreed on wages with a 61.5% increase over a 6-year contract. They're going to continue to negotiate other issues, including, and maybe most importantly, the use of automation and semi-automation at ports. Right there you see me talking to Union President Harold Daggett. That's when he first told us about the union's demand of 61.5%. The union has been highly vocal about their opposition to automation because of the potential impact to jobs. We're hearing from President Biden. He issued a statement on this tentative deal. He said in part, I want to thank the union workers, the carriers, and the port operators for acting patriotically to reopen our ports and ensure the availability of critical supplies for Hurricane Helene recovery and rebuilding. The president mentioned a number of times that having a strike at the ports and the hurricane at the same time was very bad for the economy. It put a strain on the supply chain. He goes on to say it is critical to building a stronger economy, talking about this tentative deal. The president also repeatedly said he would not invoke the Taft-Hartley Act to get the union and the port operators back to the negotiating table and keep the ports open. However, we now know from sources that are very familiar with this tentative agreement that the White House had played actually a key role in getting this agreement done and getting these two parties back to the table. So here's what sources are telling CNBC. At about 5:30 Thursday morning, just yesterday, White House Chief of Staff Jeff Zients, Acting Labor Secretary Julie Su, Transportation Secretary Pete Buttigieg, and the Director of the National Economic Council, Lael Brainerd, they met with USMX over Zoom to really emphasize the need to reopen these ports, especially after Hurricane Helene. Again, something the president just mentioned in his statement. We're told those officials together, they pressured USMX to make an offer before the end of Thursday, and they promised to get the ILO union back to the table. This group of White House officials met 5 times over the day yesterday, according to sources, to finalize a strategy that would eventually lead to this tentative deal that we're told was reached in the late afternoon, early evening on Thursday. The question now is, what, if any, economic impact this 3-day strike will have? Most estimates say that for every day of the strike, we should expect a week of congestion and backlog at these ports. Estimates vary on the daily impact of the strike economically, ranging from $500 million to about $4 billion a day. There's also a question about the impact on holiday prices and inflation. I emailed with the chief economist of Ernst & Young. He sent me a statement saying he doesn't expect any inflation due to this strike or any economic impact. He said it was just too short. If it would have been longer, you would have seen some of that. Right now in the markets, though, we are seeing some big downside moves in shipping stocks like Maersk and Hapag-Lloyd. The strike was expected to give them some big pricing power. This resolution until after the holiday season certainly changes that narrative. We are seeing some upside moves in some other transportation stocks like FedEx, also J.B. Hunt, the biggest container shipper here in the U.S. Becky, back over to you.
Hey, Frank, is there a feeling that these issues are going to be resolved in January, or that this is going to be a pretty difficult conversation, particularly around automation, and that we're just putting things off for a few months at this point?
You know, I've reached out and spoken to the two sides, but they didn't get into the weeds about the negotiations. But automation certainly is a very contentious issue. So right now, globally, just to give you some context, about 4 to 5% of container shipping facilities are automated or semi-automated, but that range of automation really varies. There's also some conflicting studies when it comes to what automation means for jobs. So just, put this in context. The West Coast port workers, they commissioned a study a few years ago, and they found over a course of 2 years, automation cost their union to lose just about 5% of jobs. At the same time, around the same time period, the Pacific Maritime Association, they represent the port operators on the West Coast. They commissioned a study, and they found that automation didn't lead to the loss of any jobs. Globally, we're seeing some kind of different conflicting ideas. When you look at some of these international ports, the union, they work with the port operators to try to ensure jobs and also create more skilled workers. So a lot of different questions about exactly what automation means for port jobs, for employees, for union jobs, and things like that. But again, a very contentious issue when it comes to these negotiations.
Frank, thank you. Frank Holland.
Like that. Was expected to give him pricing power. Pricing power.
Gouging power, you mean?
There's a fine line between president. We were talking about former President Trump heading back to Pennsylvania tomorrow, and Elon Musk tweeted out, I'm going to be there to support. And in fact, according to Daily News, many are predicting a large crowd to hear Trump speak at the very farm show property where a bullet grazed his right ear.
I read that, and after you said it before.
Yeah, so going back to the same place. Meanwhile, it's just like Elon Musk, tweeted that out. He'll be there to support. He has 200 million. He won over 200 million followers. First person to get over 200. Any guess who's second?
Who?
Barack Obama, 131. Guess who's third? Cristiano Ronaldo, the soccer dude, followed by Justin Bieber, if you're a believer, and Rihanna closely behind. But 200 million, President Obama 131 million, and then Cristiano 112, the Biebs 110, and I think the Biebs might get some more followers given what some of the things happen. Coming up, that's a different story. Coming up, we're counting down out of the jobs report at 8:30 a.m. Eastern Time. Futures right now, as you can see, indicated up a little bit. We're going to talk to Bank of America Securities market strategist Savita Subramanian, frequent Squawk guest. That's coming up next. September employment report will be coming our way at 8:30 a.m. Eastern Time. Join us now, Savita Subramanian, Head of U.S. Equity and Quantitative Strategy at BofA Securities. We usually have you here just to talk overall about equities, but there's a jobs number today. Is there are some different, I guess, angles to cover with the jobs report. What it does for the Fed, what that means to the stock market, what it does for the election. Are all these things things you're considering for what you tell your clients to do?
Well, today's report, not so much, because I feel like, we're 1 week doesn't make a trend, 1 month doesn't make a trend. But I think when you kind of look at the background right now, everything that we're hearing about is relatively inflationary. Wouldn't you think? When I look at what's going on with the Fed is cutting interest rates, or has embarked on an interest rate cutting cycle. China's trying to stimulate their economy. The Fed is actually cutting as profits are accelerating, which almost never happens.
All-time highs in the market.
And all-time highs.
But the port strike was settled. That's not inflation.
The port
That's
strike was
one
settled,
thing.
but it was settled for higher wages. I think
Yeah,
it's like
exactly.
62% over the next 10 years or something along those lines. So we've got this big kind of, a wage increase in the works. I feel like this is an environment where maybe inflation isn't spiking back to 9%, but there's an argument that we see a little pickup in inflation over the next 12 to 24 months.
4 would be devastating if that happened on top of the 20.
You know what's so interesting though? Think about where we are now, and I feel like it's anchoring because, back in 2017, if we thought that interest rates were going to be 5% and inflation was going to be 3-ish, we would have thought the market would be a heck of a lot lower than it is today. So I think that what we're seeing is just corporates adapting to, at different rates, a different inflation environment. I've said this, and some people think I'm crazy, but I think that, real rates of 1.5% to 2% would be okay for the economy. We've seen this before. We've seen it in the 80s and the 90s. Folks think that rates are unsustainably high right now and they're going to choke off the economy, but when you think about where rates are today, and nominal rates and real rates, they're actually at kind of low-ish levels relative to history.
If we did have a 4% print over the next year for inflation, you think that'd be okay?
I think it would be okay for certain parts of the market.
Well, you said corporations. For people buying eggs or whatever it is they're buying, I don't think that's going to feel good
It's
at all.
not going to feel good for the consumer, and I think the lower income consumer and lower to mid income consumers are already chafing at prices. But when you look at corporate profits, what's shocking to me is that we went through a period of 9% CPI, and corporate profits barely compressed. It was like a couple of basis points in most
They should have,
sectors.
if they are gouging, they should have widened.
Well, I don't think they were gouging, though. I think it was just an environment where they were figuring out ways to cut costs.
So they raised
cut
prices,
spending.
but not enough to cover their costs.
Well, I think that it was an environment where they did a bunch of everything, as corporates do, to rejigger their
But
business
margins
model.
compressed.
Margins compressed a tiny bit, and for certain sectors that were more labor intensive. But I think what was shocking is how little they compressed during that environment. So I guess what I'm saying is I think we're in an environment where corporates are adapting to this new normal of higher for longer rates and inflation versus what we were in, in the 2010s.
Well, back to the 4%, and I'm not saying it will be that, or even 3. Who knows? Just pick a number
Yes.
higher than 2.
Right.
Does the Fed go another, 120 basis points, 150 basis points down?
I think that the Fed I'm not a Fed expert and I leave that up to our economists, but I think that they've been signaling to us that they're buying themselves latitude to change their mantra.
And not do
this whole time they've been data dependent, driven by the data. We've, at the beginning of the year, we thought there were going to be a lot more cuts than what we're actually seeing. The market has survived. So, again, I think the Fed is important, but not necessarily the ultimate arbiter. I think what's important, if you step back and you look at what's going on right now in corporate America, we've got reshoring, we've got this manufacturing pickup in certain parts of the U.S. economy that haven't been busy for a really long time. We've got nominal GDP growth surprising to the upside. I mean, I hate to say this word because I know that equity strategists are always accused of being Pollyanna-ish, and I've been bearish before, but I feel like this is Goldilocks. This might be Goldilocks. We've got the U.S. is actually in a pretty good position. I mean,
You feel scared saying that?
I do. I feel like I'm
can
going to
tell.
be struck
I
down
can
by
tell.
lightning. But I think that there is an argument to be made that cyclicals are going to do okay, that consumers are going to continue to spend, maybe not as much as they did when inflation was zero. And, you know, the world goes on and nominal
The port
GDP
strike
trends higher.
getting resolved so quickly. Again, we don't know what happens come January, but getting that resolved quickly before it really causes massive problems. You still have the Middle East,
Right.
But
You
we've
have-
also got China that's doing all kinds of stimulus.
China's stimulating, the two biggest economies in the world are in stimulus mode.
Yeah.
I think that's positive and potentially inflationary. You know, is the market multiple justified? I think in parts it's too high. But think about it, I mean, we've got areas of the economy in manufacturing that have been underinvested in for a decade or more, and now they're coming back online. And granted, there's supply chain issues and strikes and, you know, the typical friction, but I think that what we're seeing right now is sort of a shift from just spending on tech and asset-light business models all the time to a more normal CapEx cycle, a more normal economy, a little bit higher rates, a little bit higher inflation. Goldilocks. I'm gonna say it again.
I don't know, higher inflation won't be Goldilocks for
Well-
most people. It's got to, and the Fed is set in stone at two. They
Well,
can't
they
back
say
off
so
that because they're
now.
already getting criticized about, you know, about shifting to labor when the job's not done with inflation. And
Right.
if there's any spike back up, they're going to be. I just think they're very paranoid about that.
Yeah, I mean, I think the Fed might pause. You know, I mean, who knows? They could even hike
Oh
again.
no, another pause that we'll be waiting for. We just finished with the last pause, but that was going up.
That was, yes,
Yeah.
I know. It's interesting. I mean, I think the Fed is, I mean, obviously critically important, but I think what's also important is the fact that corporate America has navigated this environment of massive volatility in rates and inflation, and earnings have remained relatively stable.
Okay. Savita, thanks.
Thank you.
Okay, folks, coming up after this, place your bets not on football, but on our elections. The CEO of prediction market startup Kalshi is going to be talking about a key decision to let the platform resume betting contracts from Congress to the White House. That exclusive interview when Squawk Box returns.
Time now for today's Aflac trivia question. Which two Denver Broncos players have the shortest names in NFL history with just 5 total letters? The answer when Squawk Box returns.
AC and Peacock.
And now the answer to today's Aflac trivia question. Which two Denver Broncos players have the shortest names in NFL history with just 5 total letters? The answer, Ty Law and Bo Nix.
Welcome back to Squawk Box. Prediction market startup Kalshi resuming some of the betting on its platform related to elections. This follows a decision by federal appeals court on Wednesday. The court's ruling effectively lifted what was a freeze on congressional control contracts, which were prohibited by the CFTC. Joining us right now in an exclusive interview to discuss it all, Kalshi's CEO, Tarek Mansour. Good morning to you. Can you just take us behind the scenes of the past couple weeks for you? And for those who have not followed this story, what's happened?
Yeah, definitely. I can take you over the past couple of weeks, but first, maybe the past couple of years. So we are Kalshi. We're a regulated exchange by the CFTC. We let people trade on any event.
Right.
We have been working on years with the CFTC to list the election market. It was banned by the CFTC, and I think we were bold enough to sue them over it. It was a very tough decision. We won in the district court early September 6th. Right. So that was amazing. It was now the first time in 100 years that election markets were legal in the United States again. It was frozen by the appeals court because the CFTC appealed, and finally a few days ago the appeals court lifted the stay. So today at 8:15 we are going to see the first legal trade on the US election in 100 years in the United States.
And why do you think that's important?
In 2016, when we started the company, when we got the idea to start a company, I was working in Goldman Sachs actually. And it was really interesting because when I was working on the desk, the most popular thing that people were requesting, and by people, institutions, hedge funds, high net worth individuals, etc., were election trades. They want to hedge against an election candidate, winning or not, hedge against Brexit and so on, or take a bet, speculate on it. And it was interesting. It's like we were giving them these bundles and so on. That's one. It was a proxy. 2, we were charging crazy fees, ridiculous premiums. And 3, this is the thing that irked me the most, is like, well, elections impact everybody. So if you have less than a $30 million net worth, you can't walk into Goldman Sachs' lobby. So you can't get that product. And so this is really important because we're just allowing everybody to access the products the same way that large institutions can.
Of course, one of the big things that people worry about when they hear about gambling or betting on the election is the manipulation effectively of this market, and whether a group of people could get together either collectively because they're doing it with each other or just generally to try to manipulate the impression that the public could very well have about the outcome of an election. What do you think about that?
I'll respond in 3 parts, I think. So yes.
But that is singularly
that is
the thing that people worry about, given when we talk about democracy and the idea of manipulating or influencing the outcome.
Yeah, absolutely. I mean, I think it's one of those things where so I'll start with the sort of headline answer. These concerns are totally moot. They're baseless and ill-founded. And there's 3 reasons for it. These markets have existed. They've existed in a number of other democracies, UK, Ireland, Australia. They've existed actually in the US. I think, Joe, you've mentioned these markets multiple times on the show, and the reason is because they're accurate. They work. They work better than polls. The polling accuracy has been decreasing over the last 10 years. So first is they have existed, and if anything, they haven't threatened elections. They've actually promoted. Now that you have a source of truth that you can quote, it's actually pretty interesting and pretty accurate. 2, every single economist, scholar, Nobel laureate, Jason Furman, who used them at the White House, that looked at the issue, submitted a comment letter in support of these markets for that very reason. It's like, 1, they're not manipulable. 2, they actually promote election integrity. And 3, let's actually get into the
Why do you say they promote election integrity?
Because they're a mechanism for truth.
Meaning what? Meaning that people look at that as opposed to polls, and that's helpful?
Well, they look at that in conjunction to polls, and in conjunction to a lot of other things, right? Like in the 2016 elections, you had a number of polls that were saying Hillary Clinton had a 90% chance of winning, which was a ludicrous statement in retrospect. These markets were not going to be at 90%. They might have been at 55%, but not 90%. And so these markets, people have skin in the game, so they don't lie, whereas in polls, they can say whatever. And 2, markets work. I mean, if you believe in markets, you have to believe that these work. They aggregate the wisdom of the crowds, and you get an accurate gauge and so on. I do want to respond to your specific, you outlined a very specific example, and I kind of really like that example. It's like, well, what if a group of people, aggregates, it's like, let's manipulate the odds of these markets.
Yep.
Sure. Let's assume they decide to spend, tens of millions of dollars, hundreds of millions of dollars to move the prices. Fine. They could do that. But what will happen is the price moves from 50 to 60. Arbitrageurs and traders on Wall Street will see that the prices have moved, bring it back down.
How much money would it cost to move it? You say hundreds of millions of dollars. If somebody bet, I don't know, 100,000, would it move it? How
No, it
liquid
would
are these
not.
markets?
100,000
How much
would not
would it
move.
take? How much?
It'll be
how
a few
liquid
million
is it?
dollars of liquidity at the top of the book. I mean, you have to spend millions to move it. But the thing is, like any other market, if the fair value is 50 and you try to move it to 60, traders will bring it back to 50 immediately.
One of the things we have seen, though, over the past couple of years, and it happened in the context of short interest on GameStop, for example,
Sure.
or in AMC, where you've seen, call it the wisdom of crowds. I don't know if it's the wisdom of anything, but it's a group of people,
Yeah.
maybe who aren't calling each other on the telephone and doing this secretly, but are doing it on Reddit or on Twitter or you name the social media platform, and they're deciding we're going all in this way. And they have moved the market not just for a day or two or three, but for months on end, sometimes in what you may describe as a rational way, what other people would say is completely irrational.
Yeah.
What would happen if that were to take place, and would that be perverting democracy?
That's a great question. There's something kind of interesting about these markets. They're not as manipulable as stocks. It might be a bold statement, but there is a correct answer here. What is the price of GameStop? Can anyone here tell me? I don't really know.
I'll give you a quote.
What is the probability of Trump winning this election? Somewhere between 45 and 55. It's probably not 90. And so there's an existence of what we call a fair value, a correct answer to this price. So these markets are not actually very manipulable. There is a thing that, okay, well, assume the GameStop thing happens and people start pumping up the price. There will be people on the other side disagreeing and saying, well, actually, it's still 50-50.
Where's Kalshi's not on the RCP average? Is it not? I don't think it's included in.
We're launching at 8:15.
Huh?
It's
So the market is
launching today.
The market is launching today.
Launching today. Okay.
Big day today.
Because Poly market's back to 50-50, and the RCP average right now today is 49.9, Harris 49.0, Trump. It's as close as
So
yeah.
Kalshi will be the first U.S.-based
Right.
market where U.S. Americans will trade, and I think we're gonna get the gauge, and we're happy to follow up on that.
What time?
It starts at 8:15 this morning. My question for you, lastly, is who's going to say carry the exchange, if you will? Meaning, like, is everyone going to be on Robinhood soon, trading this stuff? How does it
So
work?
the whole point of Kalshi, there'll be institutions and retail.
Right.
We are broadly accessible, so regulated as a regulated financial market, as a DCM, like CME. So we're accessible to anybody and everybody, and that was part of the mission. That's really part of it. It's like, if the big guy can do it,
Right.
why can't the little guy?
But do you expect all of the trading brokers and platforms to allow this trading to take place? Is
Well,
that
we're the only one that's regulated, but we expect all the brokers to integrate with us over the next year or two for sure.
And what kind of pushback or not have you gotten on that?
From the brokers,
I just, we just had the new CEO of Charles Schwab on,
Rick, yeah.
right? That's he didn't like when we called it an old line firm, but a storied firm that
No,
talks.
that was
You call
Lazard,
it, yeah.
wasn't it? Or was
That's
that?
Lazard.
Right, we're talking about Lazard, but
Storied firm.
But a
Nobody
storied
likes
firm.
Arnold, yeah.
But I don't know if certain types of firms would say, yeah, we want this type of trading to take place or not.
Well, I would say the bigger issue is, Tarek, you've made an enemy of a big regulator, the CFTC. They tried to shut you down. You won in courts.
Sure.
Okay, great. But if I am somebody who has to deal with that regulator, I may not want to touch you. I may think you're toxic.
Oh, I mean, we are regulated by the CFTC. There's a very big distinction. So
Yeah,
the
but they
other,
don't like you. Like, we had Russ Benham here.
Oh, I know. I mean, I talked to Russ 2 days ago. I mean, I think I wouldn't say that the CFTC would. I mean, that's a surprising statement to us. I mean, I think we disagreed on a matter of law. We sued them over it, and we won. We were actually right. Everything we've done from the start, 3 years before we launched, we did it legal and regulated. Legal and regulated. Why?
Hey, you won. You won
And
the court
financial-
battle. I'm just saying sometimes you win, but you lose. Like that's.
Oh, I think this time we're going to win, and we're going to list the market. We're going to do it safely. We're going to do it in a regulated way. We're working with the CFTC yesterday, last night, 2 days ago. Every day they're a regulator. Every trade is reported to the CFTC. We're a regulated financial exchange. Russ Benham and the CFTC are a regulator. We have great respect for them. We won on this matter of the law, and like Benham said on the show actually a few days ago, they will respect the law like we will. They will respect the decision of the courts, and now we're going to work together to make this a successful launch and finally offer election markets in a legal way to U.S. Americans.
Yeah, no, to me, this feels a little bit like Bitcoin. I mean, Gary Gensler may not like the fact that
Yeah,
Bitcoin
correct.
is allowed to be
Will it
there,
be in
but
the
everybody
RCP?
trades
Everybody
it.
trades it. Yeah.
You will be in the RCP, they'll add you in.
We would expect that. And
That's a good analogy.
It's a good analogy.
Yeah.
I mean, it's like these are now regulated and legal. Now we're going to work with regulators to make them safe, trusted, protect consumers, and make sure that market integrity is in there.
Tarek, thank you for joining
Thanks
us.
for having me.
Appreciate it. We will see what happens in a little less than an hour now. Good luck. Squawk Box coming right back in just a moment.
Welcome back to Squawk Box. I'm Dominic Chu with a check on your Friday morning movers. We're going to start with a check on Rivian shares. They're down to the tune of just about 8 to 9% after slashing the production forecast over there on a parts shortage for its SUVs and pickup and delivery vans. Also amid slowing demand for its EV cars overall. The Amazon-backed EV maker is also falling short of analyst expectations with regard to its third quarter deliveries, so on balance, down about 9%. We're also watching Spirit Airlines, which are plunging. They're losing about a third of their, well, now 37% of their value. This is all in a Wall Street Journal report that the budget-friendly airline is potentially filing for bankruptcy. The company is struggling in the third quarter with what it called, quote-unquote, intense competitive battles with airlines and an oversupply in airline seats. That stock, again, has fallen by about 91% over the last year as the firm has struggled with its failed merger with JetBlue Airlines. And then Morgan Stanley is getting an upgrade from HSBC to a buy rating. Morgan Stanley shares right now up about 1% or so. Those analysts at HSBC saying that its period of underperformance in comparison to peers like Goldman Sachs could be ending as pressures on net interest income ease. Analysts are also bumping their target price to $118 from $103. So keep an eye on Morgan Stanley. And by the way, for more on those and other top calls of the day, just head over to CNBC.com. Subscribers get full access to the detail and analysis behind those calls. Keep it right here. We got more Squawk Box coming up after this commercial break.
ABC.
Energy markets are weighing fears that Israel could strike Iran's oil industry in retaliation for Tehran's missile attack earlier this week. For the latest on the rising tensions there, we want to bring in Megan O'Sullivan, who is director of the Belfer Center and the Geopolitics of Energy Project at Harvard. She's a former deputy national security advisor in the George W. Bush administration and currently serves on Secretary of State Blinken's Foreign Policy Advisory Board. And thank you, Megan, very much for joining us this morning. We're trying to make sense of what's happening right now, what the potential strikes are. How do you read this? What do you think is most likely?
Thanks, Becky. Happy to be with you this morning. I think what we're seeing is still a very large, uncertain landscape where Israel is weighing the whole span of options. We've seen already that President Biden has publicly said that the U.S. would not support strikes against Iran's nuclear facilities. But the reality is, if you're Israel, you're looking at this landscape and you're thinking about when will be a better time to take out and fundamentally change the regional balance. Right now, you have American forces and carriers in the region. You also have Israel's nemesis, Hezbollah, Hamas, other Iranian proxies on the back foot. And you have the price of oil pretty low in the markets, weak relative to what they could be. And it may be that Israel assesses that there won't be a better time in the future, particularly if this confrontation leads Iran to up its nuclear capabilities.
Meaning an attack on oil facilities or meaning an attack on their nuclear positions?
I'm talking about why the question keeps arising. Will Israel attack Iran's nuclear facilities? I think they're weighing that against, one, their capabilities, but I think we've all been taught a lesson in the last 10 days or more that it is a mistake to underestimate Iran's nuclear capabilities, and perhaps it wouldn't be a military attack of some kind. I know, of course, they're weighing other options, which include energy infrastructure, as we've seen highlighted by President Biden's off-the-cuff comments recently. And of course, military targets are very much on the table.
Very quickly, do you consider oil attacks on the oil infrastructure there a given?
No, not a given per se. I think, and when we think about the attacks on oil infrastructure, there are two kinds that the Israelis might consider. There are many kinds, but two large. They could attack some infrastructure that's largely geared towards domestic consumption. Remember, Iran is pumping maybe 3.3 million barrels of oil a day and consuming half of that inside of Iran. So it could be domestic, it could be international, but it will almost certainly, if it comes, lead to more attacks on attacks on infrastructure around the region potentially, which is part of the reason why there's nervousness in the oil markets right now, although still less than we would expect if the oil markets were in a stronger, tighter position than they are.
The oil that they pump, that they don't use internally, most of that's going to China. Do we care if China's unhappy if something happens to that oil supply?
Well, I mean, we do care about the global economy, and of course the oil market is a global market. So it's not as if that oil, that potentially 1.8 million barrels a day of oil that's flowing from Iran to China, if that oil is cut off or terminated for any reason, it's not just the Chinese who will be affected by the higher price. Sure. It is, of course, the whole global economy. So what could be potentially useful here is that China could be a constructive player in this in terms of trying to tamp down escalation and a potential regional war. But it just shows you that you have a lot of actors that are going to be affected. Think about the Russians. Increase in the price of oil is going to help the Russians in their war against the Ukrainians. So this is already really moving into having global implications even before we've seen a retaliatory strike by the Israelis.
Megan, how likely do you think it is if Israel did go after their nuclear positions that they would be effective in setting back Iran's nuclear ambitions?
Yeah, I think this is the big question, and frankly, I think most military analysts believe that the Israelis do not have the capability to go after, to be successfully in terms of eliminating Iran's nuclear programs. There are a variety of different places in which they could cripple some elements of the nuclear facilities. The real question, I think, to focus on is even if the strikes are not against the nuclear facilities, what are the calculations of Iran going to be? Iran clearly has to have the message that its conventional capabilities are just not up to snuff against Israel, and that Israel has the ability to change the regional calculation based on the configuration of power right now. One way that Iran can change that is by expediting or going beyond its current virtual threshold state or status as a nuclear power. And so I think that we need to be seriously concerned about whether these events, however they play out, whatever the configuration and the nature of the Israeli military action, whether this is going to push Iran into a territory where it realizes its long-held, ambitions, I think is not too strong a word, to get a nuclear weapon.
Megan O'Sullivan. Megan, thank you for joining us this morning.
Thank you.
Coming up, we're inching. I think we're going pretty fast towards the jobs data. September, which will be at 8:30. We'll have the instant reaction at that time and the analysis. Squawk Box coming right back.
You got this.
Welcome back to Squawk Box. When we come back, the AI revolution is sparking a fundraising race. Sam Altman's OpenAI versus Elon Musk's XAI. We're going to tap into AI and so much more with the legendary Walter Isaacson when Squawk Box returns after this. back to Squawk Box. This week, OpenAI eclipsing XAI in the fundraising race in artificial intelligence, raising $6.6 billion, surpassing the $6 billion that was just raised by Elon Musk's XAI back in May. Joining us right now to discuss what is turning out to be quite the AI tech race and so much more is Walter Isaacson. He is the author of Elon Musk. He's also a Perella Weinberg advisor, partner, a Tulane professor, and importantly, a CNBC contributor. It's nice to see you.
And friend of Andrew.
And I'm very happy to say,
And Becky,
and
John.
a friend of Squawks.
Friend of Bill.
Walter, what do you make of this race? Where you see OpenAI, which seems to be clearly, I think, in the lead relative to everybody else, but you may think that everybody's very, very close to each other. And then XAI, which, by the way, at least by my eyes, has actually caught up or gotten very close very, very quickly.
Yes, XAI has caught up very much, and I saw Musk and Sam Altman together about a week ago. And there's, of course, a large bit of tension that goes back 4 or 5 years when they both started OpenAI, and now Sam is taking OpenAI and making it no longer open and no longer not-for-profit. And also telling people, if you invest in us, we don't want you to invest in others. What will be interesting is the script getting flipped a bit next week, October 10th, when Elon introduces robotaxi and things that operate in the real world. When Musk bought Twitter, he got this huge data feed of a billion tweets a day. When he has Tesla, he has 1 billion frames from cars every day. That's the data. The big thing you need is the data set to train on, and the big next leap is real-world AI. Cars that drive themselves, robots that walk.
Well, one of the questions becomes how XAI is going to be integrated or not into the development efforts of these other products.
And
so
let me tell you one thing about
Tesla,
Elon Musk is that he tries to integrate everything. He's not going to set up walls and silos, even though some, Tesla's publicly traded, XAI.
Well, that's what I was going to ask. So there's going to be an investor class that's in XAI, as we know. There's an investor class that's in Tesla. There's another investor class that's in SpaceX.
Look, when he took over Twitter, he brought engineers from Tesla and other companies to help build the AI there.
Right.
He blurs those lines. Plus, he even has Neuralink, the company that's implanting chips in the brain. So if you're wondering, is he going to bring all these things together? My answer is
Can I ask you a question about just the ability for him to advance as quickly as he has? I mean, literally, there was no true AI effort in terms of inside XAI that didn't exist a year ago.
I remember he called me to Austin, Texas, and sitting in the back of by a swimming pool in a house somebody had rented. He's telling me, I'm going to start from scratch an AI company because I don't trust Sam Altman.
So how much though is this a business that is just a function of processing power? If you have enough money to buy enough chips, and you can get NVIDIA to give them to you or to sell them to you, that you can be not just a player in this game, but be one of the top tier players. How much is it that versus the alchemy, the sort of software talent, the engineering talent to be able to write algorithms? And how is it possible that in a year or less, this group has managed to do it while Google, which was clearly at the they were the vanguard of all of this at the beginning, and I actually think inside Google they have all of the same type of talents, but I don't know if they have struggled to productize it or what's happened here, but it looks very different.
Yeah, in Google you have Google DeepMind, they do Gemini, and it's Demis Hassabis, who is, in my opinion, the greatest mind at the moment looking at AI. But you're right, at the moment Gemini is not racing ahead of Anthropic or XAI or OpenAI. I think that part of it is Musk was very smart and good at getting NVIDIA chips, getting CPUs. That's one of the gating factors. He's creating his own chip, which is taking a longer time, a Dojo chip, which is going to do visual data. So and once again, you saw that blurring of the lines. He was getting some of the NVIDIA chips for, I think, Tesla, and then he was moving it to XAI.
But his plan is not to be open either, by the way.
No.
Right. So
no.
this whole idea of, he can be frustrated or upset that he thinks that OpenAI is not open, but he's building his own closed system too.
Of total consistency.
Is it about who controls it? And do you have more faith in Elon Musk
Look,
controlling it than Sam
I
Altman?
mean, from a very elevated perspective, having watched Musk very up close for a couple of years, I'm going to say something that you might think is naive, but I really believe it, which is he has certain missions he's had his whole life. He read Isaac Asimov.
Yeah,
I have to come in and save us from hostile AI. I have to make us
Do
multi-planetary.
you think he will? I believe you 100% on his idea of a mission. I think that's who he is.
I always think after, at the very beginning, I think, man, this is definitely starting an AI company, buying Twitter.
No, I just mean, do you believe him? Do you think AI is safer in his hands than in Sam Altman's hands?
I don't, no, I don't know. I wouldn't make that judgment. I'm sorry not to give you a snap answer here, but that's
It's a complex question.
Here's a real question of what he believes versus others, is that the more AIs you have, does that make it safer? If there's 12 companies, 20 companies competing AIs, does that make it safer? Or is it better to be concentrated in the hands of a few, like
So he's like
Google,
Lena Khan.
OpenAI?
How many
And
do you-
Musk believes the more is the merrier because they'll check each
How many
other.
That's
ultimately
actually
do? That's a very
good point. That's a
interesting
very
point. But
important-
how?
yeah.
That
how
was
many
an
do you-
early thing on
How many
the
do you
market,
think
like-
there ultimately will be? Because there's some arguments we made. There's going to be a lot of smaller language models, but these sort of what they call frontier models, these sort of large
Big
language models that cost a fortune to run.
Yeah.
At some point, don't you think that they will either get merged or people will say, look, we'll take all that processing power and
Yeah.
put it towards this or what?
If
So
you
we're going to
look
be
at
down
the
to 2 or
natural-
3 in the end, or do you think this is a 5 or 6 or 7 player race?
I
Because
think it's 3 or 4, and I think you're right. There's certain natural factors that mean you need enormous amounts of electricity. Microsoft's trying to open 3 Mile Island nuclear plant again. You need enormous amounts of CPUs, things like that. So, my brother in New Orleans who wants to sort of look, he's never going to be able to do that. So there's a natural
do
concentration.
you think that long-term regulators will have to ultimately allow a big company to buy these things? Because even though OpenAI now has this sky-high valuation, for example, it's not profitable. And it's less clear over time, actually, that with scale, that you necessarily reach profits, because the truth is that it seems to be an incremental cost oftentimes to the more power generated and the more use as it goes. So it's not that you add a bajillion more users and somehow all of a sudden there's sort of a massive profit margin on the other end if you keep growing and building the model.
Right, it doesn't scale the way some other type things do. I think that I tend to err on the side of more antitrust because you want more competition. In that basic question I talked about a moment ago, I think if you have 12 companies doing it, it's better than 3 or 4.
We're getting killed, but I have to ask, do you think that Elon Musk should be paid for, or should get some kind of stake in OpenAI given the new valuation? And what
I
he gave
don't
on
think he
earlier?
wants it, which is weird, but yes, he should.
Elon,
Yeah.
if the inexorable endpoint of AI is the destruction of mankind, why would any of them be different? Who would get us first?
Well, yes, but maybe it brings us to a higher level of consciousness.
They're all going to get us. It just depends on who gets us first, and no one can stop it. That's what I worry. It could be 12 of them, but
I do think you have a good point there, which is that the market forces and all the forces don't say, hey, slow down and let's make it safer. If you look at everybody saying we should have had more safety, we should slow down, all those
It's
letters
easier
they
said-
write.
it's easier said than done,
to say,
right?
but
There's
you've
no-
got a lot of competition.
cat's out of the
That's
bag.
happened exactly with OpenAI, is when a lot of people there said, let's slow it down. You can't. You'll fall behind Anthropic or Gemini or others.
Yeah, and
Walter
they got rid of
Isaacson.
those voices.
What's that?
And they got rid of those voices.
Yes,
Everybody was-
correct. That's
yeah.
another interesting story.
Yeah.
Walter, it's great to see you. Friend of Squawk Box.
Yes,
Thank you.
It is a little after 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin, and among today's top stories, the 3-day East and Gulf Coast port strike is over. Ports and a union for tens of thousands of dock workers reaching a tentative deal on wages and extending the current contract through January 15th. CNBC's Lorianne LaRocco first reporting details of this story. Sources telling her that worker wages will increase by 61.5% over 6 years. A conflict over port automation is still under negotiation. Don't miss the first on CNBC interview coming up later this morning. Acting Labor Secretary Julie Su will join us on this story. That's coming at 9 a.m. Eastern Time. And Spirit Airlines exploring a possible bankruptcy filing following the unraveling of its merger attempt with JetBlue. That's according to a report in the Wall Street Journal that says the airline has been speaking with bondholders. It also says that Spirit has been looking into restructuring through an out-of-court transaction. And the European Union will hit Chinese-made electric vehicles with tariffs. That vote coming earlier today. The EU has said that Chinese-made EVs benefit from unfair subsidies and pose a threat to European EV producers.
Here's the futures. We are getting closer and closer to the employment report. Gains. No double-digit gain or triple-digit gains yet, but up 60 in the Dow. NASDAQ up 67. Let's get to Mike Santoli, the NYSE. Hey, Mike.
Hey, Joe. Yeah, pretty steady market heading into that jobs report. And in fact, we've been more or less on pause for this first week of October after closing at a new weekly high all time. You take a look at the S&P 500. If you look at it over a year-to-date basis, you'll see we've definitely managed to kind of get 5 months in a row higher. That suggests in itself that we're not necessarily, the market is not picking up clues of an imminent downturn. But the last two jobs reports, you did actually have a good amount of downside movement, intensified fears of a harder landing when we got those job numbers. Anything close to the current forecast for today's payrolls is pretty Goldilocks-ish type number right here. We'll point out we haven't really made a ton of headway on the headline index since that mid-July high, although the average stock is up about 3% since then. Now, consumer cyclicals, right at the focus of what the market is concerned with, is the consumer hanging in there. Take a look at Home Depot versus Lowe's. This particular portion of retail has really accelerated higher in the last little while. Obviously lower rates, obviously high mortgage refinance applications, things like that acting as a bit of a tailwind, also kind of a quality element to these big bellwethers. You guys have been talking about oil, the geopolitical situation there. One reason that the broader markets have been able to absorb this move, here's a 5-year chart of WTI crude, and you can see just the absolute levels are totally unthreatening relative to where we've been very recently. Helps explain why we've been able to handle it, guys.
Yeah, it has been a bit of a slow boil, and it's been interesting just to see this week. I guess we head into the weekend with a lot of unknowns, but
We do.
excellent explanation. Mike, thank you. When we come back, the September jobs report. The big number on the way, 8:30 Eastern time, so you got 22 minutes to go. Up next, though, the CEO of disaster recovery firm Belfor Holdings joins us on the cleanup from Hurricane Helene. 1 week after the storm slammed into the southeastern United States, the cleanup efforts that are still taking place. Stay tuned. You're watching Squawk Box, and this is CNBC. It's been a week since Hurricane Helene slammed into the southeast United States, leaving a path of destruction. Over 200 people are dead, with potentially hundreds more still unaccounted for. Nearly 1 million people are still without power, and Moody's Analytics said that the cost from the devastation could total more than $34 billion. Joining us right now with more on the cleanup efforts is Sheldon Yellen. He's the CEO of Belfor Holdings, which specializes in property restoration and recovery. I think you're the largest property restoration and recovery company.
Yeah, the largest in the world.
In the world. Sheldon, you have been down in Florida until last night, working this whole time. I know your voice is strained as a result of this. Why don't you tell us what you've seen and what you all are working on?
So, this storm reminds me a little bit of Katrina in 2005 with the depth of destruction. And then I couple it with Hurricane Hugo back in 1989 with the width and the geographic coverage, because if you look at the Big Bend area between Tampa and Tallahassee, and then go all the way up through Georgia, Little West Alabama, South Carolina, North Carolina, we've all heard about Asheville, and then into Tennessee, you're talking about 600 plus miles of coverage, the damage, the devastation. And I think that when you look at the downed power lines, the lack of cell service, the bridges, the infrastructure that's wiped out, people still not able to return home. And again, please, I say, heed the advice of your heroic first responders. Remember, downed power lines and water don't mix. You cannot take it upon yourself to go back to see your house, to see your business. You have to get clearance to go into these zones.
I mean, it's kind of shocking that we are a week out and there are still so many people unaccounted for. Can you describe what you're seeing with these rescue efforts?
Unfortunately, our hearts go out to the families who have lost loved ones, over 200 now. Excuse me. Still 100 people unaccounted for. These first responders are using every minute they have to look, search, and rescue. It's still a rescue operation, and the devastation is so widespread with a lack of communication, it's making it very, very difficult. Some of our high water terrain vehicles are being utilized to get responders in and out of areas, and we're working right alongside of them, even Belfor employees. But the damage that we've seen is so extensive and so devastating. Complete villages are wiped out, complete infrastructure needs to be rebuilt, and then Belfor comes in with the utility workers and all the people restoring communications and everything, because we've got to restore these communities. How do you restore the community? Infrastructure, and then buildings that serve the community. Hospitals. We are all over hospitals. K through 12. Belfor people are in these facilities. Industrial and commercial. People's livelihoods are dependent on the factories getting up and running again. And then, again, keeping safety first, because we have to make sure everybody's safe. And we got to prevent from mold and mildew growing. So all of the equipment we bring in, our mobile command centers with satellite communications are being utilized. Our logistical operations are enormous, because we have, in Asheville, we have over 800 people there now. In the Big Bend area, we have over 900 people there now. We have 65 people arriving every day to add to the force. Logistically, we got to provide water, food for all of our people so they can continue to work and get these facilities back up and running as fast as possible, so communities can start.
Have you run into problems with FEMA not having money? Is that, and you say that's all over the story that they're broke. FEMA, is that been an issue in terms of what you're trying to do? Do you know if is that factual?
So I don't know firsthand what money they have or don't have. What I've always seen over my past 40 years is that FEMA's never funded for an event that they're talking about $34 billion additional dollars.
Until after.
But they get funded in short order.
The stuff that's happening on the ground, I mean, it's horrific. We've heard the people saying that there's not help there, there's not help coming. Can you explain what's happening?
I think the reports of there's no help available is also due to the fact that there's a lack of communication. People don't know what others are doing, but I can tell you firsthand what I've seen. I've seen the heroic efforts of our everyday citizens, neighbor helping neighbor, people reaching out to do one small act of kindness for somebody, one hug of hope. That is the energy that's needed in these situations. And I think that that is unfolding slowly. I think when communication gets restored and power slowly comes back, because they're talking about it could be another couple weeks, you're going to see people's hope rise.
But Sheldon, you think the rescue workers, the front line, they're doing the best that they can under very difficult circumstances?
Our heroic first responders are doing everything they can. They are stopping at nothing. Like I said earlier, they're utilizing some of our equipment, some of our vehicles to get to areas they can't get to on their own. They're working shifts, and I've heard people say that it doesn't matter, I'm off shift. They're still going. This search and rescue operation is front and center for every one of them.
Sheldon Yellen from Belfer Holdings, we want to thank you very much for being with us, and we appreciate you taking the time here and everything you all are doing.
Thank you all for what you do. Thank you.
Coming up, it's coming again. I'm going to tell you the jobs report for September at 8:30, so 13 minutes away. And is an IPO the next step after OpenAI's more than $6 billion funding round? We're going to get into that when Squawk Box returns.
Welcome back to Squawk Box. A huge week for OpenAI, the company closing a $6.6 billion funding round, putting its valuation now close to $160 billion. OpenAI also securing a new $4 billion revolving credit line. Joining us now for what this could mean for the next company to go this round and investors, Axios business editor Dan Primack. It's a huge valuation. The question is how this all resolves itself. When an IPO happens, does an IPO happen? I know there's been conversation, you've written about it, about using some of this money to actually buy out our earlier employees. Where do you think this all goes?
I do think an IPO is inevitable. Now that's not something that Sam Altman and company want to do tomorrow. They obviously value their trade secret in all sorts of ways. They don't like talking too much about what they're doing before they do it. But ultimately, when you're talking, Andrew, as you know, when you're talking about a $157 billion valuation, no one's buying this thing. And the handful of companies that could afford to would never get it through antitrust. So ultimately, the out for these investors will be an IPO, and it makes sense for OpenAI. This is a huge amount of money for a private company, but OpenAI is going to need lots more money, and the public markets are the best place to find that.
Well, that was the next question. How much more money is this company going to need? We were talking with Walter Isaacson earlier about just the idea of scaling. You know, typically, the bigger you get, the closer you can get to bigger and bigger profit margins. In the context of AI, at least given the power that's being consumed and the number of chips that need to be bought, and the processing that's taking place, it does not necessarily seem that, you know, the more you add, the bigger the profits get.
Yeah, and there's no evidence that where we get there. It's a little bit like building a giant skyscraper. You just have an enormous amount of work that has to get done before you can really start to generate the sorts of revenue that can overcome that. Because again, you have the huge compute power for the research. The more people who use it, that includes more compute power. And then the third piece, and my colleague Scott Rosenberg wrote about this yesterday at Axios, is that you have an incredible talent push right now. So to get the researchers you need to compete with Elon Musk. You have to compete with Anthropic, et cetera. That costs an insane amount of money, much more than any other startup has ever had to deal with.
How do you look at what's happened at OpenAI? I mean, one of the other things that's happened, obviously, is a number, if not many of the early founders that participated at the company at the outset are no longer there. It does look like Greg Brockman's going to be coming back to the company later this year. So you're going to have, you know, him as well as Sam there. They brought in a lot of new talent. Do you think that shifts the balance in terms of how this race plays out?
Maybe a little bit. It's interesting from speaking to some of the investors in this round. You know, one of the things I asked them was, you know, venture capitalists usually talk about investing in people. And the people who were at OpenAI when this round began compared to where it closed, as you say, there was some serious shifts there. You know, chief research officer gone, chief technology officer gone. And the answer I really got was, and this is part of the company shifting from the nonprofit to for-profit model from a structural perspective, which is part of this deal, is that they're really moving from a research lab into a product-focused company, and thus it needs different people, or at least the fact that the research lab people aren't there anymore doesn't seem to concern the investors. One of the notable names that's new on this, I think, is Sarah Fryer, who's the CFO. Used to be the CEO of Nextdoor, previously really kind of ran Square/Block with Jack Dorsey. When you think about will OpenAI go public, she's the sort of CFO who would know how to take it public.
What do you think the timeline is for that?
Oh, God knows. I mean, I think realistically, probably within a couple of years. You know, within this deal, there was a promise that OpenAI made to investors that it would complete that transition into a for-profit structure within 2 years. And if they don't do it within 2 years, investors can actually ask for their money back. Would OpenAI actually have the cash to give it to them? That's an open question. But I would think OpenAI should probably try to do this in a couple of years. There's no particularly good reason not to. Every company that's ever said, we don't want to go public because we're worried about our secrets getting out, they've gotten over that pretty quickly, and it hasn't really hurt them. I mean, Google went public, they had lots of secrets. That didn't seem to hurt that company.
Dan Primack, it's great to see you this morning. Thank you. And a quick programming note, don't miss an exclusive interview a little bit later with OpenAI's COO. That's at 10:30 Eastern Time on Monday morning on Squawk on the Street.
When we come back, the September jobs report. Stay tuned, you're watching Squawk Box, and this is CNBC.
welcome back to Squawk Box. Here we are, a minute and a half away now from the government's employment report. Ahead of the numbers, let's bring in our jobs panel. Wendy Edelberg, Senior Fellow at the Brookings Institution. Joel Griffith, Research Fellow at the Heritage Foundation. Sarah Malik, Chief Investment Officer and Head of Equities and Fixed Income at Nuveen. And our own Steve Leisman is here on set, and Rick Santelli. As you can see on the lower right, we're going to do our best with only 6 boxes. 9 is always, I think, more informative and better.
I don't see how we do with just 6.
It's hard. Rick, do you wanna forecast what's happening?
I'll let Rick go because.
Rick, do you wanna? What's going to be the most important things in your view? Maybe things that could be surprising, Rick.
Well, I think we're going to be higher than expected. So I think, I'm looking for the over on jobs, and I think the actual unemployment rate, if it moves higher, that'll be a big deal. If it stays the same or moves lower. But I think that the actual jobs number is going to come in better than expected. That's what I would think would be the surprise today. But this number is truly, we say it almost every month, and maybe it's true every month, but this particular jobs number, and I'd like to see if Steve agrees, is really going to have an outsized potential effect on the marketplace and investor psyches, because we've seen the Fed now flip their lens to the labor market. Here, 2 seconds away, and as we come, hitting the wires on the September jobs report, the over wins 254,000, significantly better than 150 expected, and an upward revision to last month from 142,000 to 159,000, which means the 2-month revision now is a little over 70,000. If we look at the unemployment rate, it is at 4.1. 4.1, it moved lower. I can hear yields moving higher as we speak. And 4.1, of course, equals where we were in June. You have to go to May to get a lower number at 4%. Average hourly earnings month over month, better than expected, up 0.4%, which equals where we have been in May. You have to go back to the beginning of the year, January, when we were up 0.5%. Now, if you look at average hourly earnings on a year-over-year basis, this number also much better than expected, 4%. That equals where we were in May. You have to go to March to find a higher number at 4.1. The work week, 34.2, which makes it actually a 10th less than expected and a 10th less than the rear view mirror. To find a lower work week, you have to go back a long way. You're going to have to go all the way back to 34.3, which is going to be in February of this year. And finally, the utilization, the labor force participation rate, 62.7. It's been holding there, not a bad number. 62.7 is actually the best number of the year that we've seen on multiple occasions. You have to go to November last year to find a higher number at 62.8. And finally, the underemployment rate. The actual employment rate at 4.1 is called U3. U6 is the underemployment rate, and that has been moving higher. It was at 7.9 our last look, which was the highest since October of 21, and it came down 0.2 to 7.7, which would equate it to the lowest level since June of this year. So yields have shot up. We're at now 394, 395 in a 10-year. We see 385 in a 2-year. These are big, smart reversals. Today now marks the 3rd consecutive session that Treasury yields have climbed over the previous day's high yield, or if you want to look at it in terms of low prices, which means we're building momentum to higher yields. And that's important considering we settled the 10-year last week, get this, at 375. So we've seen some significant moves. And on the short end, we settled a 2-year last week at 356. So it's up 30 basis points from last week. And of course, the Fed last move was a 50 basis point ease. The market seems to be going the other way. Joe, back to you in the panel.
It really does. Thanks, Rick. Let's get to our jobs panel. I want to start with Steve Leisman, and so much for the Fed having numbers in advance that they know are going to be weak. But also, Steve, is the whole asymmetric risk now in the labor market versus inflation?
Yes, that's where we're at.
But does that make sense? I mean, now, don't you think?
I don't think so. Let me explain why. First of all, do you hear me muttering when I say?
Oh, I hear you muttering a lot.
I say, Rick, tell me about labor supply. Boom, he gives me the labor capacity. Rick, tell me about. He's so good. Anyway, I just want to spend a moment to compliment him. So here's the deal. The job gains were where we see. This looks a lot like a pandemic era report. 78,000 in leisure and hospitality, 71,000 healthcare and social assistance. That, in my book, is like 150,000, or the biggest part of it. Construction also up 25. Specialty trade contractors, that was the big deal right there. And that may have to do with the government programs for infrastructure. I don't know about you guys, but when I drive around here, all I see is construction all over the New York City area here. So that's part of it. There's the story for the Fed here is if you have the labor supply to meet the labor demand, that is not inflationary. Now, you did have a pop in wages. We'll see how long that lasts. The story is one of looking at inflation, and to use a word that I think the Fed chair has used, recalibrating the funds rate to where the inflation rate is. And that's why rates should still continue to come down, but as Rick pointed out, not in 50 basis point increments.
Can I just ask, we're looking at this without even knowing any of the impact from Hurricane Helene. We just had someone on set with us talking about this destruction being the broadest, widest they've seen. Someone who's actually doing the reconstruction there, the demand that this is going to require over 600 miles plus of area in the United States.
I think it's bigger than. I think we was talking about the Panhandle when he's 600 miles in Florida, right? I think
he was talking
the
about
swath in the middle of the country is even bigger and
worse.
worse.
Straight line 600.
Oh, right. Okay.
Before you get out and how wide and how broad it is. But when you say it's okay if labor supply meets labor demand, how can that be possible with the destruction that we're talking about?
I don't think. Look, I think it's going to cost a lot of money. I'll back up. There's a decline in economic output as a result. That could be an offset to the increase that's generally, I'll say one quick word about this. I know we went to the panel. I've spent 22 years at CNBC telling our bosses that even though the video is great, these big natural disasters don't amount to much when it comes to the macroeconomy. That's usually been right. And it's usually right because these big storms, they hit cities, and cities have the infrastructure to fix them. I don't know the economic impact of what just happened with Helene in these outlying areas over such a vast swath that could both depopulate certain areas and require massive amounts of infrastructure. So I'm going to take a pass on your question, Becky, and tell you you are right to question it, but I do not know the total net on Helene because there's a decline in output and there's an increase in the need to spend a lot of money to fix it. So I'll leave it there.
All right, let's get to our panel. We'll start with, I see your name up here on my teleprompter, Wendy, so let's go for it. What do you make of this? Pretty good report.
It is a good report, and I think Steve's exactly right that we need to understand these numbers in the context of what we know about labor supply. The 3-month average of payroll job gains has been about 185,000 by my calculation. That is darn close to what I estimate is the break-even rate right now, given what I think I know about the growth in labor supply from the surge in immigration. So our economy is doing a fantastic job of absorbing these immigrants, and this labor market's doing well for both U.S.-born workers and for foreign-born workers. This is great news.
Joel?
Can I add just one thing real quickly to Becky's thing, which is we also don't know about productivity. So the wage number may be in line with productivity plus inflation. I'll leave it there.
Okay. What do you think, Joel?
Well, what I was most interested in were the full-time jobs numbers, and it appears that we've seen a bit of a diversion from recent months. Part-time jobs actually shrank, which added to the number of full-time jobs. And my concern arises just from the fact that over the past year or so, we'd actually seen a decline in full-time jobs of around 900,000. So this was encouraging. But what most I'm concerned about long-term is that, when we talk about the different economic proposals put forth by the two candidates, I'm really concerned about how those policies are going to go to really play forward in 2025.
Sarah, I made the point that the Fed has focused all of us on possible weakness in the labor market and sort of the notion that not inflation has been put to bed, but that the risk lies in a slowing labor market. With with everything we're seeing, I don't know what happens in the Mideast or oil prices, and we had the port strike, which gratefully looks like it's been settled. But are we back to at least 50-50 on the dual mandate? I mean, isn't inflation at least as important as worrying about weakness in the labor market?
Well, the Fed has been clear that they've shifted to a focus on the labor market and concerns about it cracking. And obviously this number is not showing that today. It also tells us that the August rebound in payrolls was not a blip. Healthcare and government has been what has been weak recently within the payrolls numbers. I didn't hear those numbers just now, but I assume that those have rebounded a little bit going forward. So what does this mean for the Fed in November? I think we are moving back to perhaps a 25 basis point rate cut instead of 50 for November. But the market, if you look at it, even though it likely will be strong today, it's been pretty defensive recently under the current. And that's because people are worried about this geopolitical issues. Oil prices are increasing. Also, the election is coming up. But as you said, Joe, oil prices going up. Average hourly earnings at 0.4% higher. This is all inflationary. So I think the Fed needs to move back to a little bit more of a balance. It's not just about the labor market. It's also about watching inflation going forward. I think both of those are going to determine the cuts going forward, and that's likely going to be 25 for November.
Rick, maybe move back to that, or just stop telling us anything about what they think. What would be better, Rick?
I used to like it back in the old days, Joe, where, people, investors, traders, they had to actually figure out what was going on just by watching the behavior of Fed funds, the effective Fed funds rate, how it traded, especially after meetings and numbers. But to specifically answer your question, I understand that we've made huge progress from 9.1% on inflation. I get it. But really, the issue isn't about inflation in the last mile. The issue is there going to be any type of resurgence in inflation that's going to make the target more towards from where it is, not from the Fed standpoint, 3%. And I think, whether you look at the strike that was averted, 61.5%, listen, there's not the type of wage inflation spiral, wage cost spiral that I saw, 35, 40 years ago. But there definitely does seem to be under the surface that dynamic. I think the Fed's going to have an inflation problem. Not that it's going to be huge, but that it's going to bounce around and it's going to have some life. And I think they need to focus on that. In terms of the labor market, listen, I've been wrong. Some of the spreads, some of the signals in the market that called for more recessionary times. But this report is strong, and I don't see any way around that.
The economy's a disaster, right, Joe?
No, I'm not.
I'm just quoting somebody, that's all.
Oh, no, but here's my question, though, Steve. If we're not restrictive based on, like, if you are looking at inflation that what Rick was just talking about, then why would you cut again?
You can be in the wrong place, Joe. That's the working theory. It doesn't mean you're restricted. If you are hiring the number of people who are available to hire, and you are meeting the demand of hiring is not a welfare program.
Could it be there's no more cuts? That's what I'm asking.
I don't think so. I think the Fed wants to bring it down towards a level that is neutral. And the feeling is that
now.
Why do you say that?
Because inflation might resurge.
But why do you say that?
Because it just. I mean, you heard all the details Rick just talked about.
If you did 250 and you had workers for 250 and you had demand for 250 and output for 250,
inflationary forces that we're seeing.
What inflationary forces?
Labor. I mean, I know it.
Just because you hire people is not inflationary.
I'm not saying that. I'm saying the port strike. The
port strike's done.
What if there's an oil shock? What if there's? There just seems to be workers seem to be in the driver's seat right now. They got a 60%.
That's okay if you have the productivity to meet their increase in wages.
I don't. Now you're getting in the weeds with the.
Why is that in the weeds? It's exactly where you should be. If you increase your productivity,
look at the
Joe.
rules in California. Look at the rules in California. Look what they're doing to trucking. I'm sorry, but bottom of the food chain issues, whether it's wages, transporting, all the things we use, the price of poker is going to be going up. I don't see any way around it.
That doesn't mean you have an inflationary spiral, Rick. If you have an increase in the price level.
I'm talking common sense.
Oh, you mean actual economics? Oh.
Look west.
It's not an inflationary spiral.
Never have any common sense in my
Rick,
opinion.
I know you reject science, but
no. Are you kidding? I've had arguments with Andrew about science, haven't I? I like science. All
Okay.
I'm saying here is that you can throw all the economics around you want. There's going to be inflationary forces in the grid, inflationary forces in things like diesel, in trucking, okay? And these things are bottom of the food chain.
I don't
And
think
when I
anyone
see
invokes science anymore, Steve.
61.5%,
Science is a bad thing.
I don't think I'd be talking science.
But here's the thing, Rick. If you have an increase in the price level, that does not mean you have inflation. It means you had an increase in the price level. When you have the number of workers...
Let's go with that. Let's go with that. That's fine with me. Forget inflation. Toss it out. Okay, America, here's what we're saying. The prices are going to be going up. Put any name on it you want.
Rick, if you want to have a semantic argument, you can have a semantic argument, but a rise in the price level is not inflation.
Semantics. Prices are going to be going up.
You're in good
That's
shape
all I'm
because
saying.
the last thing economics is an actual science. Wendy, it's dismal if it is, but you get Nobel laureates that win in polar opposite theories. And they
Joe,
both
first
win.
of all, your hand is in my shot when you do that, okay? I'm insulted by that.
Okay, I'm sorry. Wendy,
Here.
Can't
quite reach.
Wendy, weigh in.
So the Fed does not need to set monetary policy in advance of, the ghost of possible inflation on the horizon. The Fed wants to think about what its expectations are right now, and right now, inflation is darn near target, and the labor market looks relatively balanced, remarkably balanced. And so it's not appropriate for monetary policy to be restrictive right now. If inflationary pressures come up going forward, let's say because we have massive deportation that reduces labor supply, let's say because we have a 10% across the board tariff, the Fed has a lot of dry powder to fight inflation.
Political, it's not political. That's fact, Rick.
Hey,
If
Joel,
you have...
Joel, do you think? I mean,
No,
the Fed made a move. The Fed made a move based on labor market weakness. Where's that?
Yeah, where is it?
Look, number one, I really do think it's important to be looking at the number of full-time jobs, which we do know have diminished substantially over the past year. But when we're talking about inflation itself, let's not forget that those of us who are invested in the market, yes, we are doing quite well over the past few years. The market's gone up, but a lot of people don't have those investments. For the typical family, whether you want to call it the ghost of inflation or not, we know that real wages are down roughly 2% over the past few years. That is a significant impact on a middle-class family making $150K a year. That's a $3,000 a year pay cut. And I think it's important, too, to realize that middle-class families have been taking on credit card debt to maintain their financing. And if you look at the increase in interest rates on revolving debt combined with the increase in balances, the typical family is spending another $1,500 a year just paying their credit card costs. So no, this inflation battle has not been won.
We need pro-growth policies, Joel. You're spot on.
But all the things that Joel said are deflationary.
Doesn't think
I feel I need to jump in. I gotta say, so real wages are up, not down. Real wages are up since before the pandemic, by any measure, and more importantly, total compensation has been quite strong given the employment gains that we've seen among workers across the economy.
Can you answer me if that's true?
Joel, that's not true, is it?
Is it?
No, and in fact, when we're looking at these real wage numbers, this does not even take into account, of course, the rising home costs. And look, I ran those numbers the other day. If you want to get into a middle-class home, your all-in cost for property taxes, insurance, mortgage is an additional $23,000 per year. That's why real families, if you talk to middle-class families, they feel under the gun right now because their real wages, if you're already working with just a few $1,000s a year cushion, when you take $5,000 out of that cushion, a lot of these families are underwater.
Joe, what is right? The argument on the table is whether or not inflation is going to go up. All the things you're saying, Joel, are sort of deflationary type things that people are struggling. They don't have the money. In that context, you do have a funds rate that is overly restricted.
That was Joel being from Heritage to counter Wendy being from where she's from, because everybody that's talking is being political.
No, I agree. crazy.
Is-
But ultimately,
I
Joel's
just want the actual number. Are
What's
real
that?
wages up?
hold on. I'll give you real earnings.
Not earnings,
let's do
average
wages.
weekly.
Average weekly you want?
Real
Hold on.
earnings. Average weekly
Okay.
real earnings.
Compared to what day? February 20, 37 cents. Yes, they are. Real earnings are up. The index of real earnings is up from 377 point. Sorry, from February 377.74
what day?
to 384.69.
From January
From
20th.
February 2020 to today, real earnings are actually higher.
Okay.
Real earnings
Real
are up.
average weekly earnings.
Real average weekly earnings
I haven't
are
seen
higher.
that. Joel, is that?
AI says that too. I'm looking it up.
If we go from the start of 2021 to now, real wages are down
Start of
by around
2021.
2.1%.
Right.
And look, I agree.
Yes,
This should
that's
not.
correct also. So it depends on when you
But
start.
wait,
So go from
pre-pandemic
where?
it is.
Pre-pandemic is February 2020.
Okay, we're
It's
not
up.
pre-pandemic, but we always talk about when Biden came in.
Well, except for she did say pre-pandemic.
Right. Okay,
She said
She's right.
pre-pandemic.
I know, from pre-pandemic, that goes all the way.
And Joel is also right if you want to take it from the point of when inflation was the highest.
Okay, that's all
Right.
I want. I just want
Right.
real numbers
But-
to see what's right on this. It depends on the time frame, but they're both right.
What we're talking about, yes.
No, but-
Since we're doing it in a political context,
Right, but the whole-
since the
what-
administration came in, people have lost buying power.
I like what you're saying, Joe, in the sense of what is the thing that matters to people?
Right.
And I think the thing that matters to people is the
Purchasing
sense.
power.
By the way, let me just
Purchasing
finish,
power.
Rick. Is the sense that people have that their wages have not kept up with inflation, and I don't think you can do anything to change that sensibility that people have. Either their wages have or they haven't kept up with inflation. And when you look at an average like this, I think it tells you, Joel, tell me if I'm wrong here, that half did and half didn't, right? If you have a medium like that. So for a lot of people, I think if you're a poor worker,
Steve,
you're feeling pretty good
Steve,
today.
in terms of-
And if you're not feeling as
But
good.
Steve, in terms of being so relaxed about it, okay, GDP above trend, I'm getting this from
Yeah.
GDP above trend, equity new highs, credit all-time high, gold all-time highs, corporate profits accelerating. You got no
Durable
labor market
goods.
weaknesses. Where is your reason for going down 50 basis points? Even though
Because my funds rate is above my sense of where neutral is. Now, the one thing that is the king
I
of
don't
my
want to base it
I
on.
think this is neutral.
But politically, all the things you just said would say that we're in a great economy.
I don't know if not gold at all
You just
times
read all,
highs.
except for gold. Everything you just read, you would say, okay, this is a great economy.
Except for people's
For about
purchasing power is still down from
The
where it
one
was
thing that
4
bugs
years
me
ago.
about what you said, Joe, is that GDP is above potential, but it does make me question about where GDP potential is. Maybe it is somewhat
Sarah's
higher.
back. What do you got, Sarah?
Hey, Joe, good to see you. This is why the Fed needs to still cut rates, even though inflation has picked up a little bit and the jobs market is strong. It's because the Fed can't rely on the jobs market for data in terms of a recession. Jobs market tend to crack right when a recession starts. Data goes down the elevator faster than it comes up the escalator. So they still need to be prudent here, cut rates, because the undertone of the market is that the consumer is slowing a little bit. Manufacturing data was weak. We saw that this week with PMIs. And we still need to worry, if you're an investor right now, your main concerns are the geopolitical issues and the impact on oil prices, and also what's going on in China, which is having a very strong rebound.
I don't even know if you need. I don't even know if you need, Rick, you don't even need to assume inflation's going back up to look at all the things we just said to not see any restrictive policy. There's no signs anything is restrictive right now. Is there?
No, I really don't see a sign. So I don't know, what do you define neutral as? Maybe this could be neutral. See, that's the other issue, this caveat, this word game we play, neutral. They don't know where neutral is.
True.
They have no idea where inflation's
Steve
going to be
just
a year
said
from
he
now.
thinks, you think it's neutral.
He did.
I just want to say before we get the hook on this, that I've enjoyed this conversation.
All right, we're done.
That we can sit around and have arguments and disagreements as civil
Right,
human
and
beings.
by the way, and get to the real numbers on it.
And get some real numbers.
And really look at
That's
these
what we
things.
do.
I appreciate that.
And it's Friday.
Thank you guys. And
And I'm really close to weekend.
Well, it's nice that we can do it as a luxury, talking about whether people can afford things or not. But there are people.
No,
who
you're
are
right
like,
about that too, Joe.
Like, whoa, no more ground beef. We're having just.
We got somebody really smart
We're
coming
having
up who knows
just.
more about
Steve, we're having
anything.
just hamburger helper. No hamburger.
Here we go.
All right, joining us right now is former Cleveland Fed President Loretta Mester. She is now an adjunct professor of finance at the University of Pennsylvania's Wharton School, also a CNBC contributor. And Loretta, thank you. You are the person we need to speak to most at this point. Please tell us, based on your read of these numbers, whether the Fed should cut rates again.
Well, it was a great conversation, I have to say. I enjoyed it as well. Look, the Fed has a dual mandate: price stability and maximum employment. The Fed started this phase of bringing policy rates down towards neutral. Yes, you're right. We don't know exactly where neutral is, but we do have signs that the economy is moderating. So the employment report today was a strong report, which is good for the Fed. The Fed has to balance both things. The concern over the past couple of months was maybe labor markets were cooling off a bit too much, not just moderating but weakening. I think this report, plus the revisions from the 2 prior months, really show that no, the economy is doing quite well on the employment front, and inflation is coming down. And so in that environment, the Fed has to be forward-looking, and you don't want to keep rates at the current level given where inflation has come down from and where it's going in terms of the forecast. Yeah, there are risks on the upside to inflation, and you pointed out some of them, including oil prices given the conflict in the Middle East, which may be escalating, and that's something to keep an eye on. But you have to sort of make your best policy looking at where you think things are going, and maybe you'll have to course correct in the future if things turn out differently than where you're projecting. But right now, it makes sense for the Fed to keep looking at the data it gets up until that next meeting, and then move rates down as it said it was going to do at the last meeting. It's starting a new phase to bring them towards neutral. We don't know exactly where neutral is. We don't know when the stopping point will be. But with the moderation going on in the economy that we've seen so far, which is expected to continue, and where inflation is expected to go down, it makes sense to be bringing rates down at a moderate pace. I think this report would not necessarily support doing another 50, but it is consistent with moving rates down another 25, and then, maybe they'll pause for a meeting or two.
Yeah, that would be my guess, Loretta. If you're looking at inflation, not necessarily completely where you want it, but coming down significantly, when you're looking at the jobs market being stronger than you even anticipated last month, because we not only had stronger than expected numbers for the most recent read, they revised the numbers upward for the month before. Wouldn't the prudent thing to be look around and wait and see, especially when you just came off 50 basis points when that was the most anybody had been anticipating?
I mean, you could do that, and again, they're going to have that meeting, the discussion around the table. I think it would be actually a signal of sort of stop and go policy, which I don't think would be very helpful. Look, they started in this phase. There's a lot of evidence that suggests that things are moderating. I mean, not every report that's come out has shown that everybody's hiring, right? If you look at sort of the ISM surveys and the businesses that they talked to in that survey, a lot of them said, hey, we're being, prudent about our labor force now. We can hire people. If you look at the quits rate, people aren't quitting their jobs as quickly as they were before because they feel that it's harder to get a job if they were to quit to move into a new job. So there's moderation going on in the labor market, which we want. We want sustainable labor markets. We don't want things to be overly tight, and we certainly don't want people to be losing their jobs because the Fed is too tight. So that's kind of where the Fed has to look at. It's basically balancing risk. And, in the past, you could say they had the luxury of only having to worry about inflation. That wasn't really a luxury, but you know what I mean? They had to focus on inflation.
Sure.
Now they have to look at both parts. And that's what makes this more difficult, right? The decisions are going to be difficult going forward, but they've always been keeping both parts of the mandate in view. It's kind of like if you have a panorama shot, right? You may focus on one part of a mountain, but you still want to have the valley in the panoramic shot. They always have both parts of the mandate in mind.
Loretta, thank you. Former Cleveland Fed President Loretta Mester. It's great to have you here. Squawk Box will be right back.
Good Friday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures getting a boost today from a blowout September jobs number. 254,000 beats even the highest estimate on the street. Unemployment down for a second straight month to 4.1. Got some positive revisions. Our roadmap's going to begin with the stabilizing labor picture. Far more jobs added than expected. What that could mean for the Fed's rate cut path ahead.
Plus, the port strike comes to an end, but the container ship backlog remains. We're going to be joined by a key White House official who helped both sides get to that deal. And, of course, we're keeping an eye on EVs. Tesla's got a debt sale. The EU slaps big new tariffs on China-made cars, and Rivian shares are under pressure this morning after that company cut its guidance.
Let's begin with the market reaction to this jobs report. Household survey, Jim, up 430, and we say 4.1 unemployment. It's actually 4.051.
It's a strange number because we do see these areas, the pockets of great strength, but they're the ones that usually find when things are slowing down. I mean, healthcare adds 45,000 jobs. I thought this was interesting. The average work week for all employees is down 0.1. David, even though the wage increase is 0.4, maybe that's what people just kind of say, you know what, this is a good number for the stock market, because we're not having stagflation.
All right, well, yeah, go back to that for me, because you see a number like this, which is far ahead of expectations. The unemployment rate falls. Immediately, we look at the 10-year, heading towards 4% again.
Right.
And yet the market is up. Am I wrong to have thought, I would have thought futures might be not quite as strong? And if they are as strong, what's the reason?
Well, I think you're right. I mean, I'm looking at, there's so many anomalies here. I mean, healthcare, it's all right. But food services and drink plays up 69,000. I think people are saying, you know what? The most recent rap was that things were going to slow down, and they didn't. Carl, I wonder whether there was any number that would have been bad as long as, I mean, this was not a great number for the thesis which just says the Fed's winning. It is a number that says, you know what, the Fed is doing it measured, and therefore we're not having any sort of recession on the horizon. Also, by the way, we did see rates go down big off of what happened in May.
It's a Larry Fink number, not a Jamie Dimon number. You know what I mean? Remember Dimon, of course,
he said the economy's still strong.
Wouldn't count his eggs, right? As for a soft landing, whereas Fink most recently, I'm just taking a look here, said the amount of easing that's in the forward curve is crazy, and he believes there's room for easing more, but not as much as the forward curve would indicate.
Well, look, I guess what we're set up for is, as long as we don't have a recession, stocks go higher. And this is not a recessionary number at all. The wage increases, I don't know. I mean, you get a wage increase like we had about the ports that we're going to talk about, and that's the kind of increase that is stagflation. So I don't know how important the ports contract's going to be, but I know we got to talk about it later.
Yeah, we're going to talk about the tentative agreement and what they appear to be zeroing in on, although we will also talk about some of the automation and efficiency gains which the shippers hope to get. You mentioned wages, 4/10. It's a 10th hot, but it's also a 10th lower than prior.
Right. I mean, look, did I think that as soon as I saw rates shoot up, if the S&P would go up? That's very atypical, and that's why I'm saying the anomaly here is pretty strong. You're right. I mean, if rates go up like this, we shouldn't have a great stock market.
Well, it puts into question to a certain extent what you're going to get and when you're going to get it from the Fed, or does it? By the way, that question will be asked how many times today in the next 8 hours?
Let's not ask it. Let's say this. We're about to have earnings.
Okay.
I
like it.
It's Sports Brothers. Thank you. About to have earnings.
Yeah.
I appreciate that. And it's kind of Friday time. We're about to have earnings, and what that means is maybe we're not going to have a shortfall in earnings. We have good job growth. Remember this new theory that David really propounded just now, which is really Larry Fink? No landing. That's the no land. This is a no landing number, and you never go wrong quoting Larry.
Larry Fink, Ed Yardeni's been all over the no landing
Did you
thesis.
see these charts?
Goolsbee yesterday. We're essentially at target on inflation, and we're essentially at full employment. Best economy, he argues, in his 35 years as an economist.
If we stop playing the parlor game of what the Fed's going to do and start thinking about earnings, we're going to have some good earnings based on these numbers, because we're not going to have some sort of consumer shortfall. There's no way. There's no way. And that's what I think we're reflecting right now is, you know what? Things are kind of better than you think. Now, against that, the amount of money is flowing into China. Can we stop that?
You
already?
mentioned that this morning, yes.
Yeah, enough already. I mean, I love Dave Tepper. The Panthers are they're. But this is a number that is, again, the money flowing into China has pretty much, David, come from tech. This might cause a reversal because a lot of people feel that the hot money is the only thing that's really moving anything.
Yeah.
And maybe the hot money is drawn toward us. These stocks are actually down $1, every one of them, since we got that number. Isn't that interesting?
That is, although, again, the last 2 weeks have been monumental for that market.
Monumental.
Obviously, even if you go back over any longer period of time, though, the performance is still not great compared to our own. But that said, you're talking about many stocks are up over 30%.
True, but NVIDIA was up 13 cents at 3:30, and then it was up about 45 cents when Frank Collin was on. It was up 70 cents when Squawk Box started. Now it's up $2. And NVIDIA is a counter proxy to China. That's hot money. I don't like hot money.
But you like some like it hot.
Nobody's perfect.
Delicious.
I'm a man. Yeah, he went up in a Liberator, right? No, he was in a Flying Fortress during World War II. Went up there.
The 2-month revisions, Jim, up 72K. The 3-month average now, 186K, is better than some of the doves have been worrying about.
No landing. It's a no landing number. Look, is it entirely possible that people just think that no matter what they do, we have peaked in inflation, but we're not peaking in job growth? It's never happened. There were some people who said this happened in 2001-3. I looked into that. It's not true.
All right, but to your point about earnings, they better come through because this multiple on the market is not exactly cheap. I mean, we're at, 22 times? Even when you back out the top 7 or 8, we're talking about 18 plus times for the remaining 493 S&P stocks. That's not cheap.
You want to use peg rate? I mean, we've got a market that's like more than 2 times earnings per on a lot of stocks.
Maybe it is reflecting the expectation that earnings are going to be fairly.
Well, they better be good. You're absolutely right. And of course, Apple's the ultimate battleground because Apple sells at more than 30 times earnings. It's still a trope between 16 and 18. So if Apple isn't great, then maybe we tone it down. But what happens before then are the banks. Upgrade JP Morgan today. And I think the banks are very reasonable. Banks are 11 to 14 times earnings. So you're going to start with the low PEs and work your way toward the high PEs. So I think we might be okay in terms of the cadence. Let's see where we are.
Wow, you seem pretty constructive given the chop and the pre-election chop that people have been talking about for October.
Well, I was afraid that we would have a bad consumer because we're seeing a lot of retailing stocks roll over, with the exception of housing, because that's just a prediction of mortgage. This number says you can't count the consumer out. The consumer is more than 2/3 of the economy. This number is extraordinary because this is, it's almost like Larry Fink had the number, which we know it didn't. But this is no landing. David, you can just take yourself. I used to have to go when I was a cub reporter to LAX when my editor said, listen, you have nothing to do, you're living in your car, go to the LAX ramp and see whether some plane doesn't make it. Yeah, no, that was my job. Now, it was pathetic parody of the human mind, David. But this thing is a no. If they don't land, they can't crash.
Quite morbid.
No, it was, but I was in a kind of a down mode.
But if they don't land, they can't crash.
If they don't land, they can't crash. You heard it from me first. And David, let me just tell you something. David, you look at your calendar, I look at my watch.
Excuse me?
You look at your calendar, and I look at my watch. I heard that this weekend and said that's about urgency.
I see.
Yeah.
Meantime, guys, you mentioned the 10-year. Dollars on pace for the biggest jump in about 4 months. Oil, Jim, we got to 75.06 this morning.
Did you listen to Biden on that Q&A? It wasn't clear that he really kind of drifted off. I wasn't sure whether he okayed or is looking at oil facilities. It's 4.2 million barrels from Iran, up from 100,000 during the last year of Trump. You take the Iran off, but you know that the Saudis are totally willing to make up for it, and the U.S. would have no problem pumping another million. So I guess people feel, wait a second, this is about as high as it can go. I was going to go to Dave about that Exxon pre-announcement.
I got nothing for you on that.
What are you, Jet Probst? Don't give me Jet and Probst 2 days in a row. It's a different network.
I'm aware.
That's the network.
That's still CBS, right?
Yeah, then why don't we talk about the NFL ownership?
What about it?
That's a.
No, I know the Paramount story. Yeah, I talked about that some time ago. The fact that when there's a change of control, it can open up the agreement, but the high likelihood is, of course, the NFL stays with CBS. That said, maybe they get some sort of a pound of flesh. Maybe CBS starts helping them produce some of the things on the NFL Network. So yeah, there's a story sort of reflecting that possibility today. Doesn't mean anything.
Doesn't mean anything?
What else? No, not really. What else do you want to talk about?
I don't know. I just thought that Merchant of Venice reference was pretty good.
Was pretty good. Went right by me.
I had that memorized.
Went right by me.
Right.
I'll talk OpenAI with you as much as you want.
Please.
I'm fascinated by that, but it's not a public
Sarah
company.
Fryer on
At least not
yesterday.
yet a public company.
No, Sarah Fryer on
Seems to
yesterday.
be, perhaps, but who knows?
What do you
One
think?
day. Do you think it'll be it's 157 billion?
I
Like
think
they raised 6.6 billion like that. They got a 4 billion revolver. Obviously, still figuring out the movement of structure from not-for-profit to for-profit.
I think
As
people.
I understand it, going more quickly than certainly the 2-year period they've given themselves.
I think it'll go public.
One day it will be a public
I think
company, right?
Yeah, they have some really good executives. This Sarah Fryer is so good. We have COO.
Yeah, Brad Lightcap's going to join me
They
on
wouldn't
Monday.
be put. Really?
Yeah.
How'd you get that? It's good work.
You know, every so often I work. I know urgency perhaps is more your area, but I still try to do something occasionally.
It's struggling. It's an existential thing within me.
Flailing.
No, flailing? I'm not flailing at all. You know what I am? I'm happy. Do you know why I'm happy?
Jobs number? I think we all know why David's happy today.
I don't want to talk. Look, it's a really big weekend, okay? So why don't you see if you're happy Monday?
Okay, we will.
We'll get Alonzo on the show.
We're gonna have more on the Mets. Don't you worry.
Hey, Bryce.
Don't you worry.
Bryce
And their
Harper
owner.
right here. Bryce Harper right here.
And
I'm putting it out. Bryce Harper right here.
This is going to be the
Schwarber.
ultimate showdown between you two in the coming days.
Nola.
Meanwhile, aside from the stronger than expected jobs number, we do have the port strike to watch. The workers are returning to their jobs today after reaching this temporary labor deal to end the strike, at least suspend it. Our next guest was a part of those negotiations. Let's bring in the U.S. Acting Labor Secretary, Julie Su. Madam Secretary, great to have you.
Good to be here. Thank you.
A lot of TikToks out this morning sort of looking at your involvement and Zinson's involvement and how you managed to keep this quiet. Can you talk about your role in all of this?
Well, I think the big story is obviously it's a big jobs day, and the collective bargaining process in that case really worked. We've been saying it all along that when workers have a real voice at the table, when they can help to determine the conditions of their jobs, we're seeing really historic gains for working people. We're also seeing it because we have such a strong economy. You know, there's just more to go around. Companies that are making record profits are realizing that when they do right by their workers, it's better not just for working people, it's better for their industry, it's better for for their future. It makes the American economy stronger. So we're glad to see the ports back open, and we're glad to see both sides back at the table.
There was this video of Harold Daggett mentioning that he would I will cripple you, was the phrase he used, trying to explain the leverage that the longshoremen had over the entire economy. Do you think that colored perception of the union? Did it move these negotiations in any way?
I think anyone who's been a part of these things knows that when negotiations are going on, they can get heated. You know, people can say a bunch of things. The reality is that longshoremen play a very critical role in our economy, and this, this negotiation helped to highlight that. These are difficult, often dangerous jobs. They are jobs that allow people to make a good, honest living, and this agreement is going to help make sure that that continues to be the case.
Well, Madam Secretary, Jim Cramer, the difficult and dangerous jobs issue is why Rotterdam, which is one of the top 10 ports in the world, went entirely unmanned. When I was out at a video this year, they showed me machines that would be unmanned that could handle any sort of what would have been otherwise a tragedy with humans. Where are we in terms of getting to where Rotterdam would be without laying off people, without hurting people who are currently working?
Yeah, I mean, that is part of the broader conversation around, what is the impact of automation? What do we want to see, right? Especially been highlighted because of, advancements in artificial intelligence. I think that is the right question, which is how do we make sure that as we look at technology those kinds of improvements, how do we make sure that working people share, right? It's the same issue around the wages. As things improve, we want to make sure that workers' lives also improve. And I think there are ways to do that. Automation is going to be something that the parties continue to talk about. And again, this is why workers having a say is so important. When, how, whether technology is going to be implemented, and and what the impact is going to be on real families. One of the signs that the longshoremen had on the picket line was machines don't have families. We care, and this president and this vice president care deeply, and the economic effects our record is clear on this, that when the economy does well, we care what happens to working families. And this is yet another example of how profits and prosperity can be shared.
But the rise of automation in all sorts of areas and robotics, of which we're really just at the beginning, given the rise of generative AI. I mean, I know this is a long-term issue, and obviously we're coming off a very strong jobs number this morning, but I do wonder how you think about it as the acting labor secretary. I know ultimately, are we still going to have the need for as many jobs in 5 years or 10 years as we do now, given the rise of automation and the rise of robots, frankly, that don't even exist right now, but will certainly be doing many jobs in a number of years?
Yeah, I mean, I think every, several years, there's a conversation about this. And I think one of the realities is that in many countries, like you mentioned in the port in Rotterdam, in many countries, the people aren't as afraid of what's going to happen with automation because there's so much attention to job security, right? We care about people, and that's something that this president has made very clear in his executive order around artificial intelligence, that we want, when we look at AI, to make sure that it is secure and responsible when it comes to workers too. And in the specific issue of the ports and longshoremen, the fact that they have a voice makes a really big difference. We're seeing that in all kinds of industries now. We saw it with the writers and the actors, right? We're seeing it with hospitality workers, where there's a union and where workers can have input into what happens. The outcomes are really good for everybody. We're not going to live in a world where where machines dominate. The other issue is that sometimes that raises national security issues. All of those things are important parts of the conversation.
Yeah, but you do need to get efficiencies if you're going to increase wages by 63% or so over the next 5 years. Are your expectations that wage increase is ultimately going to get passed on to consumers?
Well, I think that it's a false choice to say that either working people can do well or consumers can have things they can afford. And we have seen, again, in this economy where jobs have grown, real wages have grown, inflation rates and interest rates are coming down, that we can build an economy where everybody gets a piece of it. Everybody gets to share in the American dream. That is fundamental to the economic policies that we have pursued. There are choices that are made all the time, including by corporations, many of whom do a great deal to benefit our economy. But having to say that, if I'm going to share the tens of billions of dollars in profit with workers means that I'm going to have to charge more for my products is not a choice. It's not the only choice. The other issue here is monopolistic behavior, right? This is why we believe that we shouldn't have big corporate monopolies, because people should have a choice. Competition helps to ensure that prices also stay fair, and so that's why we're so committed to battling inequality on all fronts.
Oh, hogwash. Madam Secretary, in the Baltimore Sun yesterday, looking back 50 years ago when the dock workers were protesting a different kind of innovation, which was the shipping container. And then there was these comments made by the union president not long ago about sort of lamenting the advent of the Easy Pass and all those lost toll worker jobs. I guess, are you convinced that organized labor won't be too much friction on innovation?
Absolutely. I mean, there's no reason to believe that either unions or working people themselves do not believe in innovation, right? In fact, some of the best innovation we have comes from workers who are doing a job and recognize how it could be done better, how it could be done faster.
Oh boy.
In this country is up. That's part of the story.
I've had enough. The union just came out and said that innovation was a huge problem. And she's saying, "Oh, the unions don't care." Okay, I'm done with her. Good morning. Jobs report, actual 4-1, estimated 4-2, prior for actual 4-3-3 September jobs report. Actual, estimated. So that's not, I guess I have an issue with this. They really underestimated it, I think. My opinion. $120K, I mean, that's a huge underestimation. I talked about this yesterday, that people are going to be hiring for the season. I mean, I've never seen them underestimate something like this. And that's still not good. I mean, it's average. But what they estimated was way below average, 125K. So I have resistance at SPY at 572.87. Good morning, YouTube. Good morning, room. Let me see how much time we got here. We got 8 minutes, so I'm going to go get my water going. The SPX will open up higher this morning. Apple broke out of resistance from yesterday. Let me see. Should I leave? I'm going to leave the... Well, yeah, I'm going to clean them up. I got to be able to read this. I can't read that. SPY I'll leave, because that's this morning chart. Do. Let me see. What am I thinking? Oh, coffee. You know, I've got to let 4 minutes go by. Two more minutes. Time's gonna fly today. That was a fast minute. That's a New York minute right there. I'm gonna put an alert right here off of 570.70 for the SPY. Zim down 10%. This could be a good trade today, unless they want to wait until January. NVIDIA 124, so it's up $1.70 something. previous high. We'll just get it a little bit early. Where's my spies over here? Spies at the VWAP. Oh, I got 3 platforms up. It's October 7th. Tesla had 238 for support yesterday. Spy up $4. 401's my old employee number. I think I can go down more. It's too big of a bounce. But you never know. We've got China. China's dropping more. It had a little pop this morning. So they're still liking it. They're still liking it. But I'm getting to where I can't trust it that much at these levels. Because we had such a huge run. So they settled the strike for until January, till the new president comes in. And I heard one guy talking about Hamas trying to make a deal with hostages with Israel. Somebody must have told him what I said yesterday. Said the only way they're going to solve this issue is to have hostage exchange or something. Israel won't stop until they get them hostages back. So we had the reversal here on the SPY off the VWAP. SPX has opened up pretty big here. pretty big opening on that. We probably be looking for a pullback on it. Back to 57.17 today. We'll get the wick. I usually don't do that, but with a big gap up like that, I will. Iranian missiles hit Israel military sites. When did this come out? Well, it didn't hold up very well. We'll still wait for my support level here. Apple's pulled back. Keep an eye on Apple here. They were pumping that thing yesterday. And others were pumping, and they have lack of sales or lack of interest in that new phone. AMD new high. Meta new high, 588. Apple's the only one down. Amazon's up. They were bragging about Google again yesterday, or others were. Yeah, Google popped this morning. So SPX is off the 9. I still think it can drop a little more. That coffee went by fast. Mira and Coin are up. CLSK is up. CLSK had been way oversold to where we were trading it before. And Mister's up. They're all up. But CLSK is under $10. There's something bad happened there. Where's a SPY thing? We gotta get that SPY chart. Where's that? There it is. Right there. I should be able to move them around a little bit. Spirit Airlines considers bankruptcy. Whoa. Strong September unemployment rate. Cannabis is flat. New high on CLSK. So we got a 1, 2, 3 top coming up here on SPX. Yeah. The options are high. I don't like that. The puts are high. On SPX. SPY I can afford today, but these damn things. So my setup has 5703. I got 5721, 5718, 19. Niles at 650. I kind of need to clean my glasses off so I can halfway see. Great call on Tesla, yay. Yeah, we got October 10th coming up. And It'll be the news to make it to go to 300, 275. Or I can tank it. Right now you're on the hour time. Right now on the hour you hit the 200 and we just broke it. Now I got to turn on the air. I'm hot. One thing that a carnivore diet does do your body, it makes it warmer. I can definitely feel the difference in my skin looks much pretty. A little bit of muscle on that. Had so much energy today, I don't know what to do with it. We got a lower high here, so I'm kind of curious if we're going to drop. And if we do, we're going to hit the 21 on the SPX. We got a megaphone pattern again, so we can definitely come back down one more time. And I think we will. Take off my shoes. Today I'm wearing the Brooks Ghost Max, brought to you by Washboardjim. Very comfortable shoe. Got a great tongue in it. God damn it. These things are so freaking high. The calls are. Oh, that's because I was looking above them the money. They're still high, but thinking about grabbing a 5680 put. Spies back to VWAP and retesting it. We have an expansion pattern on it also. So it could hit 571. I'm going to move this. I'm going to put this maybe lower. I have it right on spot. So I'm going to raise this up just a little bit. Come to your senses, please. China pulled back below support from yesterday's close at 8 o'clock. And the close of the market for sure. PDD, the one that's really been the best. Okay, here's my $3 for 56.80. It's either going to pop or drop right here. What do you think, Mike? Thinking of selling Baba puts? We're at the yin yang from yesterday's high, 113.93, somewhere around there. I think we're going to drop a little bit on the SPY here. Just a little bit. It's almost not. It's just a little bitty megaphone if you count it open here. So let me see if I can get out of these. I got the 56.80 put at $3. And right now we're at a double bottom, and if we drop below it, we'll definitely hit 571. We could get $100 out of these. And then we'll reverse it back up once it hits the 200. Come on. Do what I say, not what I mean. There we go. 90, let's get 100. There's $100. I'm out. Jimmy's done. That's the SPX put, 56.80. Now you got to look at calls. October 4th. Still can't get off on that person that said bad things about me this week. I just can't get over it. I'm going to kick their ass. And I'm going to see if we hit the 200 and jump in this trade. I was way out of the money when I took that call. I mean, that put. Ah, darn it, look at that. Fuck. 490. $520. Damn it. $6. I sold it at $4. Jesus. 5750s. Calls. Dadgummit. Jesus. $57.50 strike on the calls at 520, 510 right here is $5. 57.50s. Damn it. For Monday. No. Oh shit. Oh yeah, I'm right. Whew, thought I was playing spy. At $5. We're at 620 now. Blanket. Up, down, turn around, pick bale cotton. Up, down, turn around, pick a bale a day. We need to go lower. Let's see, I should have got out then, but I didn't. That little pop was up 120 bucks. I'm going to stay here with the tweezer bottom and see. Just make sure I have a tight stop on it and get out of it, not and wait for the bottom. These are the 5750s at $5. Yep. I goes in puts and now calls. We got to break the 200. As long as we're below the 200, we're still bearish. So I'm still at risk. I can get out right now with $100 and I'll be slapping my chair again. Damn it, it's at 8. We'll see if we break here. There we go. Break, baby. Trying to negotiate a raise with one of my clients, and they're making me feel a little suspicious. Like they might look for some other help. I always worry about that when I want a raise. Break it. Get to the VWAP. So I've got this charted on I'm looking at the SPY for one reason. I'm trading the SPX with the SPY. So I'm using the SPY as the VWAP resistance. I'm using the SPY. I'm in the SPX, but I'm using the SPY chart. So if you're wondering why I've got the SPX, I'm using the SPY as a reference tool. And same thing here. If I use the SPX, we're definitely at a hard resistance right now. I should go ahead and sell this sucker. But one second I do, we pop up and I say, frick. So I'm going to risk this. I only got one call, so I'm going to risk this trade. Because I don't want to sit here and cry. I should get out. I'm up 130 bucks. But right when I sell it, thing will pop on me. And then if I don't sell it, it'll drop on me. So what do you do? I guess you take profit, right? Okay, I'm going to put in a fake sell. Insurance, bonding insurance, gasoline, I can go on and on. What is more expensive now than it was 4 years ago? Insurance up 50%. Accounting up 50%. Bond insurance up $200 this year. Looks like it wants to come back and retest the 21. I think I should go ahead and get out of this thing. I should have sold it 640. Okay, if I add right here, we drop down to the 200. Damn, them, how much of them puts? Oh God, puts are now. Whew. Huh. First time in 40 years I'm wearing a medium-sized shirt. Break it. $56.85 went to $10. That'd been an excellent trade. I had two of those contracts. I'd been done for the day. 1,400. I'm thinking about adding on here, but I'm gonna wait just a little bit longer. Add on two more contracts. I got one at 5. Dang, I gotta get her name. Tesla's pulled back and hit the 21 on the 1 hour. We hit the 200 on the minute. So that could be a trade if you're watching Tesla. You know, I put the word out to all my clients. I want a 15 to 20% raise, and all of them but one's accepted. They accepted, but they're acting a little fishy.
I cannot accept that course of action.
That's right. When I first started this business, 75 to 80% was all profit. Now it's down to about 20, 25. Because everything's gone up so much here in the last 4 years. My bonding insurance is up 300% in 4 years. Break it. Nvidia's dropped a couple bucks. We're at a yin yang on it. $122.80. Come on. I'm about even on the SPY here. Oh, yeah, the SPX. We've got some. Looks like we're trying to squeeze, but I'm above even now. I'm up $100. Where's the SPY? There it is. If we break the 200, we could hit the VWAP or get out now. I'm at 490. I should get out now because I'm up a couple hundred. 180, 100, yeah. Break it. We got 2 contracts at $3. All right, 560. Now it's time to exit. SPX exit. Out, 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 out. So I'm done. .67 average. And I learned something yesterday from, was it Alex? He uses the Apple, and I think he mentioned Microsoft to figure which way the market was trending. I didn't do that here, but I just now remembered that, so I've got to get me a chart set up with a SPY and the SPX on it with Microsoft and, or at least Apple on there. I don't consider Apple being a market maker anymore like it used to be. It never really was. But I'm going to watch that and see. Double bottom. We got the SPX down here. It could hit the 200. That was the previous close, which I'm finding kind of attractive right now. You see where we were here? I mean, that looks very, very strong support. So I'm just going to be a little patient here on out. I had a frickin' cake this morning. I regret eating it now. I mean, Jim, you want a piece of cake? Hell yeah, I haven't had cake in 6 months. Crickets. I wish I could puke it back up. I mean, I was real strict about my diet when I played ball and when I was a jockey, but now I'm more strict than ever, I think, now. I went out a couple nights ago to, it might have been yesterday, a couple nights ago, I think. The Longhorn had a steak and I hated it. It was horrible. Okay, get ready for the SPX. So we're going to move these calls up to 57.40. I want to get closer to the money. We could drop just one more candle, but I'm going to grab one right here. $4. Just in case it doesn't dip down. It should dip down to the 200. But I want to be in the trade just in case it doesn't do it. If it does it, I'll grab two more. Break it. Break it. Go away. The video green to red. Yep. Right now I'm in the calls here, so we're going to see if we break out. We're at a solid support, but I mean, you can drop a little bit. If it hits that 200, I'm going to jump in, see if it stands at 200 a couple minutes. But right now I'm in the trade. I'm got my conviction on. But if it dips, I'll add two more.
Danger, danger, Will Robinson.
Yep, here it is. But I have to be humming on that 200. I'm going to put 2 more in here, just in case. Took 380 to 430. You don't trust what you're seeing? We're squeezed. We're in a squeeze here. We're going to know within less than a minute if it wants to hit the 200 or break. Break it. Got that one. We just need a break here. Okay. Now, we'll see how powerful my 200 is right now. We got a 1, 2, 3B. So, time. Now I'm going to wait 1 minute. I could go ahead and just take the risk now and add on, but I'm going to wait 1 more minute. I got to wait for a tweezer bottom or just some kind of evidence that we're going to go sideways here. I could get 2 more at 360 and then scalp it back to 4 and get out of it. But I'll just leave it alone. I got to wait. This is when you got to be disciplined and have confidence in your trade. Wubbits, tubus. Someone asked me once, what do you mean when you say 1 2 bits, 3 bits? That's dog talk. I was teaching my dog how to do tricks. So you want tricks? I'm gonna count a tree. Wumbus, two-bits, tree. So now we're going sideways. And it is, and I got to look at the clock because I know the fat cats are getting ready to go to lunch here in 21 minutes if they haven't already decided to do it. Yeah, is this Domino's Pizza? Yeah, would you deliver me a Hawaiian, please? I'm afraid to leave my desk. What was ready to add? You sucker. Right when I get ready to add him, 360 it jumps. Son of a biscuit eater. I'd be out of the trade by now. Talk about being 10 seconds off. If I would have made that knock, I'd be in the trade. Hey, you stupid nut. This is Brendan. Man, FBI, open up! You'd be up, man. You'd be up a couple $100 by now if you took that trade instead of knocked out the door and got a pizza. I'd be up $220. Maybe more than that. $450, $470. I'd be up a lot more than that. Shit. $490. So 360 and 490. It's a 260 plus 90. That'd be 350. I timed it perfect too. Dadgum. Oh well. So the only thing that's really changed is two things: the jobs numbers, which I don't think it would have mattered what they were. It's all fuzzy math to me. They way underestimated the jobs number to pump the market. And then the strike. I didn't see that coming. Not the way they were talking, like, no higher or hell or high water. We ain't going to give in until we get our 61% pay increase and we get answers on innovation, which I talked to my nephew. He said 60% of the ports now are innovated. Which I think, it'd be a lot more smoother and a lot less injuries. It's hard work. Well, you'd have to think it is. And I didn't think about looking at the trucking companies. That would have been a good short. JBL is probably number one when it comes to hauling them canisters around. Okay, we're getting up here now. We broke two resistance levels. We're looking at number 3 and then number 4, and actually I think we can get it back up here to triple tops. So if you're in this trade and you're a little nervous, you sell now that you hit to 63, or you wait. But I mean, this is an exit idea. If the 9 crosses the 21, well, she'll give her a nice little shot up here to the 1, 2, 3 bits. See here, we already dropped down to $4. I love my moving averages. I want to give a shout out to Mike, Yoko, Randy, Alex, if you're listening.
Thank you very much. That's really nice. Thank you.
Johnny, Livid Goose, Jimmy Joe, in that exact order. Subway's been on here for a long time. He's a silent partner. So our goal is to get up here to 3. Sell this thing for about $300. Jim, what do you see on that chart? Well, I see an inverse head and shoulders, where I could add again if I have to. Or I can add, not again. I missed the first time. And there's 2 of them actually. It could be a little higher, or it could be right here. Let's go down here. I'll give it another shot. I could have got out real nice trade that one. We got a double bottom right here. There we go. Breakout. Okay, here we go. 5:30. I got some at 4 back when it dipped to 4 again. So I'm 5:50. Keep going, baby. Before you even get there, you got to think to yourself, okay, I broke major resistance levels. We could easily pull back to my previous yin yang, which was the old resistance right here, back to the moving averages, or we get out now with 300, 420 bucks. You know what I'm saying? Or we run it up to the 1, 2, 3, but the closer we get, you want to get out in the heat of the moment. Why everybody's still looking at calls, you want to be the first one to think, okay, man, I've hit my goal here. I got 3 contracts at $4. I'm up 520, 530. We're hovering back and forth here at this resistance level. Should I sell it and just? I mean, that's a good trade, 300 bucks. And you got 1,200 in it. You know it's going to come back and try to retest this resistance line. What would you do? Or you could sell most contracts and leave one as a runner. Just like what Mike said. See, we're back down to 430. So Jimmy got out. Now he's going to get back in maybe. That was a little nervous. A little tension there. That was a good idea, Mike. Jim. This thing's acting so weird. I got 3 frickin' no. I'm wanting to make duplicates and it's not turning on me. Three of them here. I got 3. What? Megaphone. This is the weirdest frickin' day today. I mean, my... Damn, there she goes. Come on, baby. 540. I could have added more and I didn't do it. 560. Winning! Now you hit your target. There's only one thing left to do. And that's knock on the door. Brandon! You gotta be proud of me, man.
FBI, open up!
Be proud of me, Brandon. I got your 10%, plus I'm going to give you 5, as long as you don't send Hunter over here with them sluts. YouTube, I did not say that. I'm out at 560. Perfect. So I'm going to go into the kitchen and cook a pork chop and watch this thing run up to 1,000 and break resistance. 610. Yep. If you can count to 3, you can trade with me. What'd you think about that, Yoko? You want to give me a good grade? Yahtzee Award. It's the hardest part. I'm not the best. I admit it. The hardest part is for me to stay into a trade when I'm up. And the hardest part is for me to get out of a trade when I'm down. But I've left so much money on the table, a lot more money on the table than I have by taking losses. Let's put it that way. So, moral of the story is you got to learn how this coming year to stay in these trades longer. And make a couple $1 million next year. I think I can do it. I know I can do it. I think I can do it in about any kind of market. But these guys are so bullish right now. The market's probably the bullish I've ever seen it. They're just relentless. I don't know if it's bullishness or if it's just pure 100% greed. But there's something different. because in my opinion, nothing's changed. Geopolitical reasons why it's got worse, you know, but in any kind of story, I mean, it doesn't matter if it's good or bad. But I'm glad I looked at the board there, because I was going to sell all three of them. And I did, and I kept one. And that alone gave me another $50. Yay. If I'd held all three of them, it'd gave me another. Right now we're at 6. 620. So here you go, you know. But you got to take it. You got to stick with your plan. Trying to figure out how I want to cook this pork chop. You can't overcook them, I know that. I'm going to cook it like a steak and just sizzle it, stir it. $6.40, Jesus. All right. Hmm. You think it's greed? I do too. We nailed that bottom. Do you understand why I felt confident in that trade? Let's look at the big picture here. See this right here? This previous close. We pulled back almost to that previous, and if you look at the wick, so I had two confirmations. I had the previous close and I had the 200 SMA. The previous close and that 200 SMA. So I had a confirmation. I had two confirmations plus the 1, 2, 3 boom. I had three confirmations. Triple bottom, 200 SMA, and then the previous close off that wick. And I used the bodies, of course, but I would have set my alert at that wick, which I think I did. So I had three confirmations, and the more confirmations you get, the more confident you get into the trade. And then I exit the 1, 2, 3. So I'm quite, it's astonishing how they reoccur like that a lot. They respect it. But remember, you got to go back and look and see where's that bottom or where's that gap. That's called a gap. I mean, down to the top of that. So that was three confirmations. And then we pulled back here and had an inverse head and shoulders. See what I'm saying? So that
Affirmative.
Affirmative. And we touched down that second time. Always say inverse head and shoulders. Man, this computer, this platform's really fucked up. You had that second right corner right there. It could be my computer, I don't know. I've been trading off this computer for 4 years now, 4 or 5. I'm so excited. I don't want to overtrade. I'm going to go in there and make lunch. I'm looking at property now in Hawaii. I don't know what I want to. I don't know if I want to spend a lot or just want to make it my retirement place.
It's my money and I need it now! It's my money and I need it now! It's my money and I need it now! It's my money and I need it now!
It's your money. Use it when you need it.
Call Washboardjim at 1-800-866-3737 and make sure he gets his 10%. Click on the search icon on your Windows taskbar and type command. COMMAND. Command prompt. Is that what you're looking for? Am I right? Open. Oh shit. Let me do that again. That's what I got. And click on. But right click on. COMMAND. Right click open. No, that ain't gonna do it. Right click on. Run to administrator, open location file, pin to start, pin to taskbar. Run as administration. Oh shit, what have I done? Now I can't see nothing. Hit yes. Mike, I can't see nothing. You don't. Okay, I hit yes. Type the exact as above, include a space. Space after scan now. No space after. Okay. Command prompt. Open the command prompt up, type in I might do that after. I'm afraid I'll fuck something up. I got this window right here. Type in that after that. Should I type it in after that right there? And then what happens when that happens? You must be an administrator running console session in order to use the safe utility. We're getting back to the 200 here. I might get your help after hours. Right now, a second. Okay. Click on the search icon. Hit command. Hit enter and let it run. Put in the safe. Do I drop it below it when I put it in, or right next to James Howard? Next to it's fine. Right next to it, or should I space it out? It spaces itself. And then what do I hit? And what do I hit after that? Enter? And that's what I get. So it doesn't want to do it. It keeps doing that. Okay, let me try this again. Right click, command prompt, run as administrator. Windows command processor, verified publisher in Windows, yes. Scans integrity of all protected system files and repair with files. right click prompt window. Run administrator. Yes. FSCs. Oop. Hit enter. Beginning system scan. Okay, it's beginning. I'm gonna go turn on my skillet and I'll be right back. We're back down to support again. Beginning verification phase of system scan. Does this clean it up or something, or did it just tell you it's got a problem? We're at 47%. We're halfway there. It'll automatically fix the problem. Good. Because I'm having a heck of a time. I mean, this computer I got's not cheap. $2,000. It's the first time I've ever done that. We're starting to reverse. Got a snake with a hammer. Windows protects found corrupt files and successfully repaired them for online repairs. Okay, so now I just close it. We're done. All right. SPX on watch again. Reboot my computer. Well, I'm going to do it right now. I'd have to, YouTubers, I'll be right back. I'm going to reboot my computer right now. So YouTubers, I'll be back here in a second. I'm going to close this down and then I'll come back on.